Francine Aqua here in Rome, covering the political crisis. Our Tom McKenzie's in London.
And here are your top stories. D-Day for Draghi. Italy's Prime Minister faces lawmakers today. The future of his government hangs in the balance. Sea of Green, Netflix surges on better-than-expected subscriber numbers, boosting stocks. Plus, Gazprom is set to resume gas shipments through Nord Stream as the EU plans a voluntary 15% cut in demand. Let's take a look at futures then. After a very strong day on Wall Street, is the S&P's best single-day gain in about 3 weeks. The Nasdaq ending up more than 3%. Yes, Netflix was part of the mix. Certainly, the subscriber numbers were not as bad as many had expected. But there's also a question mark as to whether or not and to what extent the pessimism around earnings is now fully priced in. And we had that Bank of America survey suggesting that fund managers now have the most exposure to cash since 2008 and the least exposure to equities since around 2001. Let's check in then how things are performing. The FTSE 100 gaining 0.3%, up 27 points. You had the Bank of England Governor Andrew Bailey, again, putting 50 basis points on the table when it comes to that August decision from the Central Bank of the UK. We had the inflation print coming in higher than had been forecast for the month of June. The CAC 40 over in France gaining 0.5%, Spanish IBEX up 26 points, and the German DAX gaining 0.3%. There's few more details coming out around the potential bailout of Uniper, the utility company, by the German government. That's expected to land on the Chancellor Olaf Scholz's desk on Friday. Let's switch things on, see how things are breaking down then across these assets. Of course, we keep an eye on the commodity space. Gas was coming off slightly earlier this morning on the back of the suggestion from Vladimir Putin that gas flows will restart around Nord Stream 1. But to what extent, and that volatility, the uncertainty is expected to remain around just how much gas Russia will be pumping into Europe. The futures stateside then pointed to gains of 0.3%. Euro dollar at 102, just a gain there of 0.3%. That move out of the US dollar has been, of course, risk positive as well over the last couple of sessions. Brent at 106, down by 1.2%. And Bitcoin has broken out of this range between 19,000 and 22,000. It's sat in for the last few weeks, currently at 23,700. So it's an upside there for the crypto space, gaining 1.8%. But it is the politics of Italy that's firmly in focus for us today as well. Francine has been on vacation. I want to ask about Francine's holiday, and I want to wonder as well if there's a correlation between Francine vacationing in Italy and the political strife of that country, Francine.
I have to say, I was at the beach and it was a quiet day, and then suddenly everybody started talking about lo spread. They were worried about financial markets, because this is something, Tom, that you may not know, is that Italian savers, and it's really moms and pops that buy bonds at the post office, will actually talk about spreads. They're believers in Europe, and they worry about their investments probably more than any other European country. So I have to say, it was quiet at the beach, and then suddenly the political crisis was done, and even the 97-year-old grandfather was talking about what it meant for his investment.
That is not something that happens here in the UK, is it? Le spread, discussions of the spread on the beach. So the Prime Minister, Francine, will be giving a speech. We expect around 8:30 UK time, so 9:30 your time. And it's going to be a big moment for Mario Draghi.
Yeah, so we're expecting him to give 2 speeches, but by speaking to parliamentarians, it is probably the first one where he'll lay out whether he resigns. Now, we could be a little bit in limbo so that he could give an idea of the priorities that he wants to achieve for the government without really saying whether he resigns or not. Again, then there's votes of confidence. If you look at the arithmetics of both houses, it does seem that Mario Draghi would have enough support. Yes, Mr. Conte, who's in charge of the 5-star, said he no longer wants this, but we also understand that this would be more for negotiation to get some offerings from Mario Draghi than really trying to push him out. But then it just depends on Mario Draghi whether he's willing to stay. Again, he said he was here as, you know, a person in charge of a government of unity, and unity there's not, Tom.
Okay, so from the discussions on the beach over in Italy amongst 96-year-olds to the Italian Parliament, thank you, Francine, across all of this, of course, for us. Let's get over to Bloomberg's MLive managing editor, Mark Cudmore. Mark, you are looking at what is being described by some, at least, as a bear market rally.
Yes, Tom, I think there are so many more interesting dynamics in that conversation with Francine. But yes, I think the backdrop here, the macro away from Europe is, hey, we're getting a bit of risk on summer markets. Can this continue for some time? And I think I just want to kind of use a chart very simply to show that, yes, this bear market rally can continue for some way, and yet it still will only be a bear market rally. The backdrop fundamentals are that we've still got an incredible inflation problem. Financial conditions are way too easy. They need to tighten much more, and it'll get much tougher for equities later on this year. But we got a little bit too worried about recession in the short term. So you could see that between here and the peak back in November, there's 30% of room. So like we could say rally another 6-7%, say, bring us up to kind of where we were back in March, February, those kind of levels. And yet we'd still be clearly in the long-term downtrend. So I think the point is that you don't have to be an uber bull to think that this rally can run. And even if you are an uber bear, for example, you maybe don't want to fight this rally in the short term because we can get a bit of a relief rally. There are 2 big event risks to get through. Europe, it seems like the gas one, we're not getting the worst case scenario, so that's one good event. And of course the Fed next week. But we get through them, we could be right into summer markets. We could have a 6 or 7% rally into the end of August.
Okay, we're seeing gains of 0.3%. Mark Cudmore pouring a bit of cold water on the rally that we are seeing in equities. Bloomberg MLive managing editor, of course, Mark Cudmore. Right, let's get to one of the catalysts, at least yesterday on Wall Street, and that's Netflix, which is expecting to sign up 1 million subscribers in the current quarter and reverse its losses in the first half. Its subscriber base declined by 970,000 in the second quarter. That's less than half of what Wall Street feared. The credit is going to the new season of Stranger Things. CEO Reed Hastings discussed the numbers in the company's earnings call.
If there was a single thing, we might say Stranger Things. But again, we're talking about, losing 1 million instead of losing 2 million. So, tough in some ways, losing 1 million and calling it success. But, really, we're set up very well for the next year.
Okay, for more on this story, let's bring in Bloomberg Quick Takes' Alex Webb, who've been across the numbers for Netflix. Alex, what was kind of the key takeaway for you? Less bad than many had experienced, or expected, I should say, around the number of subscribers that they lost, and the forecast for the rest of the year looking a little bit more positive.
Yes, when we were talking about this yesterday in anticipation of the numbers, we were saying that any glimmer of good news would be taken positively by the market. It certainly looks that way. The stock is 5%, 5.5% up in after-hours trading. It went as high as 10% at one stage. And ultimately, yes, that is because they were expecting a 2 million decline in the number of subscribers. In the end, it was only 1 million. Even looking into the next quarter, they're expecting to add 1 million. The market was expecting 1.8. But because there was just one glimmer of good news in there, the market seemed to react positively.
Okay, thank you very much indeed. Bloomberg Quick Takes' Alex Webb, who, for the record, is not yet a fan of Stranger Things. We'll see if that changes. Alex, thank you. A fresh 40-year high, and meanwhile, for UK inflation, consumer prices rose 9.4% from a year earlier, heaping pressure on the Bank of England to deliver a jumbo rate hike next month. Let's get more then with Bloomberg's Lizzie Burden. Lizzie, will this CPI print, 9.4%, change the bank's thinking?
Well, I have to say, Mark, it hasn't changed market pricing, but that's because markets already pretty much see a 50 basis point hike from the BOE in August. Whether it will change the Bank of England's thinking, I mean, it provides a persuasive case for 50 basis points. It's driven by food and fuel, which is going to hit consumers where it hurts, but it's also more widespread than that, which suggests this inflation could be more resilient. And let's not forget, we're not even at the peak of inflation in the UK yet. That's not set to come until the fall, when you have energy bills due to rise again. So when you combine it with the language we've heard from the Bank of England recently, that it's prepared to act more forcefully, the governor putting 50 basis points on the table last night, combine that with the jobs data yesterday and a survey that showed from the Bank of England that firms' inflation expectations are high, really our economists do see 50 basis points coming for us at the August meeting.
Lizzie, thanks so much. Lizzie Burden there with the very latest on the UK. And then, of course, there's a political matter also in the UK, so we'll keep a very close eye on that. Now let's get into the key market drivers with Benjamin Jones. He's Invesco Director of Macro Research. Ben, thank you for joining us. I mean, there's a million things to do with inflation and whether a lot of the central banks now even have to do more, because the market's already pricing in possibly a 50 basis points from ECB and the Bank of England. Do you think that they will stop at nothing, central banks, to deal with inflation, and what kind of equity market does that give you?
Yeah, good morning. As you say, an awful lot to deal with. I think on the inflation point and the central bank point, absolutely. I think that is the number one priority for central banks at the moment. And look, none of the central bankers want to be known as the central banker that failed on inflation. So I think, no, that we will see higher and more persistent hikes, unfortunately, through the end of this year. Obviously, the hope is that then we get some further easing in the supply side, and then you get that Fed and pivot towards the end of the year. And there is a good chance that does happen, but it's not going to happen this month. So I think, yeah, look, a 50 basis point hike from the Bank of England coming up. I don't think we'll get that from the ECB. I think they'll be a little bit more cautious. There still is that sort of caught between inflation and the fragmentation risks in Europe. So I think the ECB will be a touch more cautious, but certainly not from the Bank of England at the moment.
Okay, so 50 basis points potentially from the Bank of England. Do you think it's unlikely ultimately the ECB does go for 50 basis points, even though, of course, they have flagged that? We'll see what the decision is on Thursday. Ben, how would 50 basis points, though, if you're getting that call wrong, how would that affect the way you want to be allocating into EU equities?
So we're cautious on equities across the board at the moment. And I think, as your colleague Mark pointed out earlier, I think we're in this sort of bear market rally at the moment. I think there's a couple of things to worry about for equities going forward. I think we are still going to get further rate hikes through the course of the rest of this year. But the bigger issue is then growth. Now, the first half was very much about inflation surprising higher, rates moving higher, and multiple compression. I think the second half is actually going to be more about the growth backdrop. And unfortunately, the way that Q2 earnings season is shaping up, you're not sort of getting that those growth disappointments. You're not getting that cathartic shakeout in markets at the moment. And for that, you really need that, I think, for the market to put in a bottom. So broadly speaking, a bit more cautious on equities going into the latter part of this year. I think with Europe, though, I think the better way to play it is, and in fact, globally, is more relative value bets. Sorry, Francine.
Yeah, so are there any bonds that you're buying at the moment? Anything in fixed income? Or is there a hedge par excellence, given what we could go through in the next 6 months?
Yeah, we're trying not to keep it a little too complicated, but I think it's more at the moment just adding a little bit of duration, and I say that sort of at the margin, but we're tending to think about the sort of longer term bets. So just dipping our toe in the water, yeah, but certainly not doing it any kind of size. So we're sort of prepping for that sort of pivot at the end of this year. Other than that, I think staying away from places like Italy at the moment. Obviously, you've mentioned already the political backdrop, the fragmentation issues as well. And for me, the political backdrop is something that I just have zero confidence in being able to call at the moment. And thankfully, in the type of areas that I'm working at the moment, I do have the luxury to say, look, if I don't understand something, if I don't have a great deal of confidence there, I'm just going to stay away. So Italian bonds, Italian equities, we would tend to be just staying clear of right now. Not necessarily because I think there's going to be a massive widening in spreads or a massive collapse in Italian equities. It's more that I just don't have the confidence to play in that area right now.
Okay, the political uncertainty, of course, of Italy. We hope to get a bit more clarity around 8:30 UK time later today. Ben Jones from Invesco staying with us. We'll get more of your calls after the break. Thank you. Coming up, the EU is targeting a reduction in gas demand on concern that Russia may halt gas supplies. We discuss the detailed implications next. This is Bloomberg.
When you think of cutting-edge technology at sea, you might be thinking of stuff like this. But there's an incoming revolution on the high seas that isn't quite as sexy, but could be significantly more impactful.
Container shipping is the key component of global trade. About 80 or 90% of all the world's goods are transported at sea at some point.
But there's a significant unseen cost to the modern era of global commerce.
About 3% of all the world's CO2 emissions come from shipping.
3% may not sound like a lot, but that's roughly comparable to the entire CO2 output of Germany. Since reducing trade isn't a likely option, what about a technological improvement to help reduce the emissions from these well-stocked maritime behemoths?
Welcome back to the Open. We are 15 minutes into the European trading day. Ben Jones of Invesco calls this a bear market rally, but it is a rally, up 0.4% across the benchmark. You're seeing some outperformance across financial services and energy. You're also seeing a bid for Italian bonds, BTPs. Yields are lower by about 9 basis points on the 2-year, lower by about 7 basis points on the 10-year. Francine Lacqua is on the ground in Rome. It's worth noting that Francine's gauge of espressos meant she was able to call the inflation picture well before the central banks, Francine. So I want to get your take on the espresso prices in Rome, maybe gelato as well, given you spent a bit of time on the beach.
Yeah, and then if you look at some of the luxury stores here, you can also predict, you know, the next recession in China. And of course, there's like a whole other metrics for euro strength or euro weakness. Tom, if you look at, there is a belief, and you speak to parliamentarians, that there's moral pressure on Mario Draghi. And this is the 2,000 mayors that actually wrote the letter to him saying, please stay on because Italy needs you at the moment. And also, you know, for example, Pedro Sanchez, the Prime Minister of Spain, writing that editorial yesterday asking him to Spain that the pressure for him to stay as long as he has the numbers, and it looks like he has the numbers, is too big for him to ignore. Now, the thinking is, if Mario Draghi leaves at the moment, which is probably the worst time for Italy because of inflation, because of the cost of living, but because of also the ECB fragmentation tool. I know it's something that you've been looking at in great depth. The other question is, in December, there's a large amount of money that the European Commission also has to disperse to Europe and to Italy, but that's in exchange for reforms. And so if Mario Draghi leaves now, we may not be able to get the reforms needed to get those funds.
Yeah, all of the uncertainty so far, investors, as you say, you're assessing the impacts or the likelihood of him holding onto that coalition. So far, it seems investors appear to be aligning with that view. And of course, we hope to get more clarity from Mario Draghi, the Prime Minister, when he speaks in about 10 minutes' time or so. Italian equities currently up about 0.1%, and there's a bid for BTPs. Let's get to what's happening across gas, of course. There is an impact here, of course, when it comes to the geopolitics, from the localized politics of Italy to the geopolitics of the Eurozone and Russia. The EU is set to propose a voluntary 15% cut in natural gas use by member states starting next month. The continent will face an enormous challenge this winter, ensuring there are enough gas supplies to fuel power generators. Energy giant Gazprom will restart gas exports through its Nord Stream 1 pipeline to Europe on Thursday, though at a reduced capacity. Let's bring back in Benjamin Jones, Director of Macro Research at Invesco. Ben, how are you thinking about the uncertainty around gas flows out of Russia? How difficult it is to make a call on inflation in the Eurozone and the recessionary impacts, given we don't know what's happening ultimately in the head of Vladimir Putin?
We don't know what's happening in the head of Vladimir Putin, and I think that's exactly the way that Vladimir Putin wants it. I think the thing that we can be probably fairly confident in is that he's going to try to maintain this ambiguity and uncertainty around the gas flows, which is why I do think that gas will restart, maybe not necessarily this week. I wonder if it'll hold off for a day or two, but I think gas flows through Nord Stream 1 will come back. He won't play the full card and cut that off immediately. But I think the flows will be volatile and fluctuate through the end of this year, and that's going to keep places like Germany in particular, which is obviously the main sort of endpoint of Nord Stream 1, but other places like Italy, which are highly dependent on Russian gas, it's going to really just force those gas prices higher, but keep them volatile. I think volatile is the most important point there. That's just going to continue to contribute to that those inflation prints in Europe, and then just make predicting GDP highly uncertain. But if we do get a larger cut, well, it's very, very clear that the GDP is going to fall in that environment because you are going to need rationing.
But Ben, at the same time, so is it a given that actually we get an embargo on gas, given things are going, and how much of this is already priced into the gas market?
I think look, I mean, you've seen the moving gas over the last 18 months or so. There is an enormous amount of bad news priced in. But even if we get a complete cut-off of Russian gas, or we get a significant drop to sort of 40% of the gas flow through Nord Stream 1, that's going to still put very significant pressure on industry and households over the course of the end of this year. And in that scenario, I think there is still further upside for gas, and ergo further upside for inflation in that scenario. So yes, a lot of bad news priced in, but it doesn't mean that the news can't get worse from here, unfortunately.
Ben, I want to take you to the UK, where the FTSE 100 has proven to be something of a haven. It's essentially range-bound year to date, but you are moderating your view on UK equities. What's the rationale?
Yeah, and again, it's a view that obviously has played out very well over the course of this year. It's been after many, many years of being a terrible place to be invested. Now, the UK is fitted quite nicely because it was, one, very under-owned by investors, but it was one of the deeper value plays. And it also had has a very high commodity sector bias. Those are all the things that have played out very well over the course of the beginning of this year. The issue that we have going forward is if we move from an environment where it was about inflation to one where the growth fears are more of a concern, then we do have some concern that perhaps you get some softness coming through in some of the commodity related areas. The UK does tend to be somewhat of a slightly more cyclical market. In that scenario, we could then start to get some underperformance from UK equities. I don't think it'll necessarily be the worst place to be, but I think just the fact that it's been the best place over the course of this year, it could start to sort of trade more in line with the market, and we would look to places like Japan and other more sort of quality income areas as a place to be invested over the remainder of this year. So, as you say, it's more of a moderation in view, certainly not a complete turnaround in view from the one that we've held over the course of the beginning part of this year.
Ben, thank you so much. Benjamin Jones there, Director of Macro Research at Invesco, and we'll have plenty more on the markets throughout the day. Also coming up, of course, we're here live in Rome. The future is in question for Mario Draghi. He'll be speaking to the Italian Senate in Rome this morning before lawmakers hold a confidence vote a little bit later. We'll bring you all the headlines and his address live. This is Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Stocked early enough all these precious materials you were just mentioning, and we were on the lucky side that our prognosis was spot on in a way, forecasting what kind of material we would need and what quantity we would need.
Welcome back to the Open, everyone. 30 minutes into the European trading day. I have to say, it's a little bit calmer than it was last week, certainly when it comes to BTP spreads. The thinking here, Tom, and I know we've been talking about whether Mario Draghi stays or whether he goes. Everyone's singing that song, should I stay or should I go? But the question is that where the markets are kind of hostage to what he's thinking. It seems that Mario Draghi has the numbers to stay in power as prime minister, but he always said that he was a prime minister of coalition of unity. There's no longer unity because the head of the five-star movement wants to go out of it. So what does he do? Does he stay on and says, look, this is a three-point plan that I want to do? We know that markets want him to stay. We also know that a lot of the Europeans want him to stay because a lot of the structural reforms that he should be able to pass through December also means that actually they can get that EU funds that they will be disbursed to them.
More important than the markets, Francine, you just put an earworm into the heads of all of us, and I think we need to get a rendition towards the end of the show with your singing. Absolutely, it's remarkable, isn't it, to see the pressure that Mario Draghi is under. The world's worst. I'm sure that's not the case. It'd be you versus Berlusconi. Maybe we should set that one up. Let's check in on some of the individual movers then. ASML currently down 1.3%. They've cut their guidance on sales growth from about 20% to 10%. Part of that, though, is how they mark some of their sales on the back of the testing by their customers of their lithography machines. Uniper gaining almost 5%. Details there about the bailout that's coming, it seems, from Berlin. And Royal Mail down more than 5% after the first quarter earnings missed. Coming up, future in question, Mario Draghi will speak to the Italian Senate in Rome this morning. We will bring you that vote and that speech. This is Bloomberg.
estudio, nuestro experimento, no hemos pintado todos los edificios de blanco, sino estos más asequibles de pintar. Y ya hemos detectado reducciones medias en el área metropolitana de 0,8 grados aproximadamente en un periodo de ola de calor y con picos máximos de 4 grados de disminución en un momento puntual del día, en una zona puntual del día. Y como dices, en una ciudad como Barcelona funciona incluso mejor que las zonas verdes, según las modificaciones nos detectan incrementos, o sea, disminuciones de temperaturas mayores con tejados blancos que con incrementos de zonas verdes como tienen planteados el plan director urbanístico.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Welcome back to the Open, everyone. We're 30 minutes into the European trading day, and here are your top stories. We start with Italy, D-Day for Draghi. Italy's prime minister faces lawmakers today. The future of his government hangs in the balance. Sea of Green, will Netflix surges on better-than-expected subscriber numbers, boosting stocks? Plus, Gazprom is set to resume gas shipments through Nord Stream as the EU plans a voluntary 15% cut in demand. So, Tom, I think as always, inflation, of course, we look at the gas markets, but markets in general seem to be a little bit more at ease than they were a couple of days ago.
Yeah, relatively benign, as you were saying, around the political risk in Italy. And of course, you had some earnings positivity that filtered through in terms of the session yesterday on Wall Street. The S&P posting its strongest day in about 3 weeks, gains of 2.7%. The Nasdaq ending up more than 3%, so that tech-heavy index performing very well as well. So the handoff to Europe, there it was strong. And what you're seeing reflected is gains of around 0.4% across the benchmark. Of course, we are still weighing up the implications of potentially a 50 basis point hike from the ECB come Thursday. And of course, the details that we're looking for, investors are looking for around that anti-fragmentation tool. We heard as well from the Bank of England Governor, Andrew Bailey, saying 50 basis points is certainly on the table as well for the BOE when it considers its next hike in August. The DAX is gaining 0.4%. The FTSE 100 up by 0.6%. There's some moves there to the upside around iron ore and copper. Basic resources giving a bit of a boost for the FTSE 100. Let's switch it on, see how things then are playing out sector by sector. Invesco, by the way, warning that this is a bit of a bear market rally that we're starting to see. The Bank of America survey, though, will that give investors some confidence given just how far and how much exposure investors now have to cash and how little exposure they have to equities? The lowest exposure to equities, according to that survey of fund managers since 2008, the highest exposure to cash since 2001. Across your sectors, financial services leading the pack, gains of 1% there. 3 sectors in the red as things stand. Telecoms down about 0.2%, utilities and autos also just off. So 3 sectors in the red, the rest are in the green. Modest gains, 0.4% across the benchmark. Francine, we have the speech that we're expecting from Mario Draghi, but as we mentioned, it doesn't seem like the markets are panicking at this stage, at least, around political risk and around indeed whether or not Mario Draghi is going to be forced to step down as Prime Minister.
Yeah, I think it's a different story from last week. First of all, we understand that he has the arithmetics to stay. I guess the concern is that he doesn't want to be convinced to stay because A, he's had enough, and 2, he's always said that he would only govern if there was a coalition of unity, and that unity has kind of dissolved. But at the same time, he's gotten so much pressure from European mayors, Italian mayors, writing letters saying we need you to stay because of the structural reforms needed to make sure that they access the EU funds. There are concerns about the fragmentation tool tools, that the ECB would be less likely to give something substantial if he doesn't stay. And there's also been so much pressure from the Commission, from other EU leaders that want him to stay at least for a while, at least for the next 3 to 4 months, to make sure that they have access to the funds, that some of the reforms are further along the way, that there's an understanding of thinking, maybe wrongly in the markets, that because of the type of person he is, that has a sense of duty, he would stay. Now, we'll find out more shortly, or it could be a speech that's actually quite ambiguous, Tom. We could have a speech where he says, these are my priorities, and then we have a confidence vote, but he doesn't stay, he doesn't 100% say we'll stay, but it's implied if he says that he wants, Italy on a certain path in the next 3 to 4 months, and then we have elections next year.
And we hope to bring you that speech live when it happens. The Prime Minister of Mario Draghi addressing, of course, the Italian Parliament. Currently, Italian equities are actually off by about 0.5%. Bonds over in Italy, BTPs are bid. Now, Bloomberg understands that Mario Draghi's successor at the ECB, President Madame Christine Lagarde, is redoubling efforts to find agreement on a still incomplete new crisis tool. This ahead of tomorrow's key policy decision, expected to see the first rate hike since 2011. Let's bring in then Jumana Salahin, Chief Economist and Head of Investment Strategy Group Europe at Vanguard Asset Management. Jumana, thank you for coming to the studio this morning then. So speculation that we get 50 basis points from the ECB tomorrow. Would this be a case, if that does happen, would this be a case of the Central Bank of Europe pulling forward, front-loading the rate hikes to prepare themselves and give themselves for optionality around a recessionary environment in 2023?
Good morning, Tom, and thanks for having me. Yes, absolutely. There is that pressure to bring forward those rate hikes, as you say, the front-loading of interest rates in order to get to the neutral rate of interest, which is neither expansionary nor contractionary for the economy. And we know that if we look at the ECB and the main deposit facility, interest rates are still negative at -0.5, and that's actually quite low relative to, if you think, where the Bank of England is, above 1, and similarly the Fed. So the ECB is kind of finding itself behind the curve and having to play catch-up in that window of opportunity, as you say, potentially with a recession risks looming further down the line.
Jumana, give me a sense of what Italy needs now. So, the school of thought says we just need to go to elections, so that illegitimizes actually the government, even if it risks having access to some of that EU money. Or do you think markets will really go haywire with, an Italy without the Prime Minister being Mario Draghi?
I mean, I think as you said, Francine, there's going to be that pressure to kind of give that stability, particularly in the near term, as those rates come off the floor in Europe. And I think as long as they can give that near-term, reassurance to markets that they are going to have that stable, whether with Draghi or with his guidance, I think in the short term it has to keep doing all the fundamental reforms in order to get their growth up, which is one of the main challenges for Italy, particularly with rates rising and, the fragmentation risks in the euro area.
So let's build that out a little bit in terms of the fragmentation risk, because you've got the politics and Germany and the Germans and the Dutch as well, others in the north of Europe are likely to push back on the use of that anti-fragmentation tool if it does look like it's addressing political risk in Italy. So just how much more complex does it make it? And what are you looking for specifically from that tool that we expect to be delivered tomorrow, at least outlined in more detail tomorrow?
Yeah, so I think in terms of that tool, we think it's going to be very similar to the outright monetary transactions program, the OMT, that the euro area introduced in 2012 after Draghi's whatever it takes speech. So I think it'll be similar in design. The conditionality will be probably softer, because the thing with the OMT was it was never used because the conditionality was strong. So they're not going to have those strong conditions so that it can be used. It'll be flexible. We'll buy assets with duration and size being unlimited. And so there'll be quite a lot of flexibility in how that tool is going to be used. So what that means is if that comes in, that will give a signal to markets that it's a backstop, which will stop markets from potentially allowing those yields to blow out. But the key point really is, what they're looking for is, are we seeing any moves in those markets that are away from fundamentals, right? So it's not about fundamental behavior. The political uncertainty that you mentioned, that will be related to fundamentals. Political uncertainty determine the economic fundamentals, and that will be not a case for the ECB to use this new anti-fragmentation tool.
Jemana, do you think that actually the fragmentation tool, or whatever is announced by the ECB, has to be large enough to really be a deterrent? And how large does it have to be for the markets not to test it?
So I think that in the past, the ECB hasn't given explicit size on how large it has to be, because I think the very nature of such a backstop is that you have to say, look, in terms of when we look at movements in these yields that move away from what fundamentals would suggest, we're going to do whatever is necessary, whether that's, a particular part of the yield curve, whether it's a bigger size. So I don't think that the key defining characteristic will be the size of the purchases.
Jemana, this is a bit of an outlier question. I just put that into our chat with the producers. But given the wildfires that we've seen across Europe, the concerns about the climate crisis, is it time for economists like you, is it time for the financial media like us to reassess and stop obsession around GDP as it is currently defined? Do we need to start looking at data that includes the costs of growth as well as the simple arithmetic around GDP, the ecological crisis that we're facing now, and how that ties in to the business of economics?
I mean, I don't think that would be my reaction to the crisis and, the climate crisis. I think it's more about making sure that net zero in 2050, what does that mean? What does that mean in terms of economic policies? What does that mean in terms of sectoral policies? And that will have it will back down through to growth. So I think economic growth is the right measure. It's just making those links between sustainability and climate policies tighter than they are today. At the moment, they're not very one for one.
Jemana, thank you so much. Jemana Salehin there, Chief Economist and Head of Investment Strategy Group Europe at Vanguard Asset Management. Now, we'll have plenty more, of course, on the political turmoil and on the wildfires. Coming up, a big day for Italian politics as the country waits to hear Mario Draghi address the Senate. We'll discuss what to expect from this evening's confidence vote. This is Bloomberg.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
It's a great question.
Great question.
Great question.
Great question.
Great question.
That's going to be the best question I get all night.
I'm glad you asked that.
Bloomberg Television. Top experts. Great questions.
Welcome back to the Open. We are 43 minutes into the European trading day. The rally is starting to fade here. You're seeing a growth, an upside, I should say, of just under 0.1% across European equities. US futures, the S&P E-minis pointing in a similar direction as well after a very strong day on Wall Street. Invesco warning us earlier in the show that this is likely to be a bear market rally. It seems to be what is transpiring right now. You're seeing pressure across Italian stocks. The FTSE MIB down 0.6% as we wait for Mario Draghi and that important speech, of course, to the Parliament of Italy. In terms of BTPs, they are bid. Yields are down on the 2-year BTPs by 11 points. Yields lower by 7 basis points on the Italian 10-year. Let's get back then to Francine Lacqua, who's on the ground in Rome and has an important guest for us to digest the politics of Italy. Francine.
Yep. Yeah, I have to say it's a big day for Italian politics. We wait, of course, to hear from Prime Minister Mario Draghi, whether he stays or whether he goes. Now, he addresses the Senate. And what should we actually expect from this evening's confidence vote? Are we on course for another election this year, or do we get a chance for reforms, structural reforms, to get the money, of course, from the EU and then advance? Well, let's get more on all of this with Lorenzo Castellani. He's professor of history of political institutions at Luis Guido Carli. So thank you, Professor, for coming on. So as a professor of history, I'm sure you're not fazed with all this political turmoil. Yeah. Do you think Mario Draghi stays?
I think Mario Draghi stays. Today we have to assess if he will stay with the same majority, with a new majority which might comprise a part of the 5 stars, and if there will be a split within the 5 stars. But it is very likely that Mario Draghi will stay.
So does that actually matter to what Mario Draghi needs to achieve? I mean, he needs to give stability. He needs to make sure that the Commission, the ECB, even understand that he's serious. So that could help with the fragmentation tool and with the disbursement of funds.
Yeah, it's very important that it will stay in a very tough economical scenario. There are the decrees and the legislative decrees of the next generation EU objectives to accomplish. So stability is very important for the next budget law to address inflation problems. So it is very important to maintain stability. This was in the mind of the President of the Republic, Sergio Mattarella, and of a large part of the parties of the majority and the leaders as well.
But Professor, does it change actually the fact that we go to elections next year? So how long, if we have Mario Draghi, let's say until December or maybe January, what does that mean?
Well, what we can expect today is a very harsh speech, tough speech by Mario Draghi in order to achieve the last objectives of the government for the next months until the end of December, basically.
Tough how? Saying his parliamentarians like, guys, what the heck are you doing?
Saying, I have this program, you have to support it without muddling through the parliament and without tensions in order to accomplish these aims. And then you can go naturally to the election when the legislature is expiring.
But are these reform programs that would lock in Italy, or if there's, for example, the right that comes into power whenever there are elections next year, early next year, mid next year, that they can unravel them?
Yeah, for sure. The tensions within the parties, of course, will be stronger in the next months for the approaching of the electoral campaign. But it's very important for Draghi not only to accomplish domestic reforms, but as well being on the European Union tables in order to bargain for facing the economical scenario. So I think Draghi might play on both sides. The domestic one, looking for more confident political parties on his governmental action, and at the same time looking for support from the parties to improve the Italian situation on the European Union tables.
Do you think this actually changes the way the ECB sees Italy anyway, that the damage has actually been done?
Yeah, for sure. For Italy, the decision is better that the authorities of Draghi is still in place. So it's very important to maintain him as a prime minister. This is why the Italian civil society is mobilizing in favor of Draghi, because they know that stability is extremely important in this moment, and the charisma of Draghi at European level might be very important for the economy. economic scenario.
But Professor, the others are saying, but he's not elected. I mean, how many of these technocratic governments are you going to have without going to the vote?
As Italians, we are experts of technocratic government and crisis management. So Draghi is not the first technocratic experiment. Of course, it's a very peculiar experiment because he's a technocratic prime minister with a very populist parliament. So this is why there are so much difficulties sometimes to deal with the parties. But, you know, the Constitution is allowing this kind of solution. And so...
Professor, I'm going to cut you off because the man himself, the man of the hour, Mario Draghi, is just addressing the Senate. Let's listen live.
Says Mario Draghi. Well, let's see. Let's see. Maybe it's going to be better now. So this decision followed the fact that there had been a majority that supported this government from its birth. The President of the Republic did not accept this, and he said that he was going to inform Parliament. I agree with that. So today I can explain to you and to all Italians the reasons why I made this choice, which was a very difficult one, but at the same time a necessary one. Last February, the President of the Republic asked me to create a government in order to deal with the various emergencies, the pandemic, economic emergency, and social emergency. And these were his words: a high profile that mustn't be identified with any political formula, a government that will actually deal with the major emergencies. And all the main parties, with one exception, decided to respond positively to that appeal. And the conversations in this hall, we talked about the Republican spirit of the government, and was based upon national unity. And over the past few months, national unity allowed us to assure the legitimacy of this executive and its efficiency. And a president of a council who's never actually appeared in front of electors should have as much support as possible within the parliament. And this imagines that the emergency is even more important, where the government has got to make decisions which will affect deeply the lives of the Italian people. And the approval of this government allowed us to respond very quickly with regard to decisions that the President of the Republic had requested. And the forces of majority were able to put aside or set aside divisions and to approve the state with generosity as far as quick and efficient interventions for the good of all the citizens. And thanks to the health measures, thanks to the vaccination campaign, thanks to support for families and companies, we're able to overcome the most difficult stage of the pandemic and also introduce an economic upsurge. And as far as investments and protecting incomes, we could actually get out of this pandemic more quickly and avoid this recession more easily than other countries. And last year, the economy, in fact, went up by 6.6%, and the relationship between public debt and internal debt was of 5.4 percentage points. And as far as the National Resilience Plan, we were able to which was approved of by the majority of this parliament, we were able to have reforms and investments which had no precedent in recent history. And the reforms of justice, competition, tax, tenders, and also simplification of measures. They are really essential steps to go forward and to modernize Italy. And today, all the objectives of the first two semesters were achieved. And we've also already had from the European Commission 45.9 billion euros, and to that will be added in the following weeks another 21 billion, a total of 67 billion. And with the support of the majority and also the opposition, we reacted with firmness with regard to the invasion of Ukraine by Russia and the condemnation of the Russian authorities and the full support to Ukraine demonstrated how Italy is able to and must have an essential role within the European Union and also within the G7. At the same time, we have never given up our search for peace, a peace that must be acceptable for Ukraine, can be supported and will last. And we've tried to ensure that Russia and Ukraine can work together to avoid a food catastrophe and at the same time to open up a negotiation. The progress that has taken place last week in Turkey is encouraging, and we're hoping that it can be consolidated. And we also very quickly try to overcome the unacceptable dependency on Russia, because for years we had myopic and dangerous choices. And so in a few months, we're able to reduce our import of Russian gas by less than 25%. And we're hoping to be able to make that zero in a year and a half. And it's a result that would have appeared to be unthinkable, but certainly can give us, comfort us as far as the industry and our families. So the strength of our national security, our credibility within the world. And we've also accelerated a deep simplification and massive investments as far as renewable energy is concerned in order to defend the atmosphere and increase our and reduce our dependency on energy. And we decided to try to protect companies and citizens from this crisis. And we're particularly looking at people who are very weaker. And despite our margins of public finance, which were restricted, we're also able to do this because we're able to find collective credibility, which was we were able to reduce the cost of debts and not increase, in fact, taxes. So the advantage of these results was thanks to you and thanks to your availability, in fact, set aside differences and to work for the good of the country and with dignity as far as mutual respect is concerned. And you had the best possible response to the appeal of last February by the President of the Republic and by the request to be serious with regard to the need for protection, with regard to the concerns for the future, which come from the citizens. The Italians have supported this civil miracle and became real protagonists of the policies which systematically were introduced. And I'm thinking about the respectful patience to try to stop the pandemic, the amazing vaccination campaign, the way in which wonderfully Ukrainian refugees were received in schools and homes, and also the involvement of local communities that, in fact, set up the most major transformation project. And never have I been as proud to be Italian. I'm so proud to be Italian. Italy is strong when it's able to be united. Sadly, over the past few months, this request for cohesion that came from citizens, the political forces had a desire for division and differentiation. The reform of the upper councils, various bodies demonstrated that the majority was falling with regard to the agenda of modernization for the modernization of the country. And as far as foreign policy is concerned, there have been some attempts to try to weaken the government as far as Ukraine was concerned, and to also stop our response to Putin. And this became stronger when it was a question of supporting the debt, and the desire to go forward together progressively started extinguishing itself, and then to be able to act efficiently, speedily in the interest of the country was becoming more and more difficult. As I've said at the Council of Ministers, the vote last Thursday showed the end of this solidarity pact that kept us together, and not a vote loyalty in a government you belong to is a clear political gesture which has an obvious meaning, and it's not possible to ignore it, because after all that would mean that you'd be ignoring Parliament. It's not possible to contain it, because it would mean that anybody could repeat that, and it's not possible. It's not possible to minimize this, because after all, it's after months of ultimatums. The only path, if you want to stay together, still stay together, is to build this pact from the beginning once again. And the only path, if you want to stay together, is to build this pact right from the beginning with courage, with altruism, with credibility, and to ask this of Italians. After all, the mobilizations of the past few days by citizens, associations, and is without precedent, and it's impossible to ignore it. And the third sector, schools, universities, the world of economy, professions, companies, the sports world, we're all involved. We're talking about a support which is not merited, but I'm very grateful for it. The two appeals that particularly struck me. The first one from 2,000 trade unionists. And also authorities that are used to having confrontations or deal with the problems within their communities. And the second appeal from the health staff, the heroes of the pandemic, and as far as they're concerned, we have an enormous amount of gratitude. So this request for stability means that we all have to decide whether it's possible to recreate the conditions under which the government can govern. And that really is at the heart of our discussion today. And this is what we have to look at. Italy needs a government which is able to work with efficiency and speedily on 4 levels. First of all, resilience. We want to be able to improve our growth long term, to create opportunities for young people, women, to make sure there's equilibrium between North and South. And at the end of the year, we should be able to achieve 55 objectives, which will allow us to have another 19 billion euro. And we're looking at fundamental themes. So, for example, the digital infrastructure, tourism, the creation of university housing, research grants, and also in order to do so, we have to do this seriously with our citizens, as far as our citizens are concerned, and European partners. If we don't know how to spend this money with efficiency and honesty, we'll be able to not ask for other instruments in order to manage the crisis. The advances mean we have to realize many investments from the railways to large band for creators, and we have to make sure we can have to realize all the projects that we in fact had wanted to achieve with the help of local communities. We want to get rid of useless bureaucracy, which often stops the development of the country. We've got to make sure that the communes have all the necessary instruments in order to overcome possible problems. And currently, we have to really introduce reforms quickly, and also investments means that we can actually then have full employment. And as far as public tender is concerned, we hope to be able to quickly have public works and also have instruments to fight against corruption. We've got to make sure also that we control the mafia.
È il modo migliore per onorare la
memoria di Giovanni Falcone e Paolo Borsellino. Remember Giovanni Falcone and Paolo Borsellino.
È il modo migliore per onorare la memoria
And it's the best way to honor the memories of Giovanni Falcone and Paolo Borsellino and the men and women
dalla loro barbara uccisione. La riforma del codice degli appalti è stata approvata.
Cruelly killed. And as far as the code with regard to tenders has been approved.
So that was, of course, the Prime Minister of Italy, Mario Draghi, speaking in the Italian Senate. Now, he did not say whether he would stay or go, but we understood from the fact that he said he is ready to rebuild the coalition, the governing coalition, that he also mentioned the outpouring support he got in the last few days, that he's possibly not looking at going now. Now, we'll follow, of course, the speech live. It's still going on. We're expecting it to last another 15, 20 minutes. Certainly the markets, if we look at the markets on the back of that, seem to be taking it as the Prime Minister ready to look at the arithmetics to get enough support, of course, from the Senate to try and rebuild this coalition and push the reforms through. I was listening to the speech with Fabrizio Pagani. He's Global Head of Economics and Capital Markets Strategy at Muzinich, former Italian Treasury official. So he understands the intricacies, of course, of being in Parliament, of looking at the Senate, what Mario Draghi could or could not do. Fabrizio, as always, thank you so much for being with me. So we're looking at the speech together, and just by saying, look, he's ready to rebuild a coalition, he, I guess, has been persuaded to stay for a little bit longer to push the reforms through. Is that your interpretation?
That's my interpretation. Thank you for inviting me, first of all. There is a bit of a nuance. I think he's saying more than rebuilding the coalition is rebuilding the pact underlying supporting the coalition. because basically in the first part of his speech has listed the achievement of the government, which are indeed quite impressive, started with the vaccination campaign and the next generation EU and all that. But then he says that the action of the government have been somehow worn out by the differences and somehow a sort of internal opposition within the large majority, which he still enjoys. Let me remind that this government has a majority of around 80% of the parliament.
So he has the numbers to stay. It was just because it was no longer unity that he wanted to stay.
There is too much infight within the government, among the parties of supporting the government, and let me say also within some of the parties supporting the government. This is also in a certain way natural, because also this is a technocratic government, and we are approaching elections. So parties are scrambling for position in order to have a political space and political gains in view of the elections which are due next year, early next year.
We both followed him, of course, as he was also ECB president, very closely. I've never heard him raise his voice before. I mean, this was kind of listening to your dad for the first time swearing. Is this a different kind of Mario Draghi? Does he push through the reforms more aggressively to make sure that they get the funding from the EU?
Yeah, perhaps, indeed. Also in his tone and his undertone, I think he's moving a bit from his more technocratic, cold central banker attitude to a more political, indeed, of someone who's addressing the parliament, and a parliament which is divided and at a certain times needs leadership. So sometimes to raise voice can help in establishing that leadership, especially when it's coming from someone with such an authority.
Yeah, and again, so this is about not only, of course, the disbursements of the funds by the EU, but this is also the tools that the ECB would look to put in place for this anti-fragmentation tool. If you're an investor right now, or if you're the ECB, you look at Italy and you say, okay, I have Mario Draghi, but for how long? Do we go back to square one in January of 2023 with possible snap elections?
I think this is a very delicate moment for the ECB from several points of view. The rate hikes and the inflation and all that. And then there is the discussion about these anti-fragmentation mechanisms. They call it now transmission protection mechanism, yes. as far as
more palatable for the Hawks.
as I understand. And of course, there is no doubt that Italy is and will be the major beneficiary of that mechanism. So somehow, it shouldn't be like that, but somehow internal domestic Italian politics counts when we take that decision, and when the ECB will look into that. Paradoxically, if Mario Draghi goes, Italy will need that mechanism even more. Yeah. So it will more in need when it deserves it less, yeah. Because of course Draghi with his with its credibility ensures the stability which Italy needs.
Fabrizio, we understand through the polls that if we were to go to election in Italy in the next couple of months, there would be a coalition of the right with Madame Meloni, that would be, of course, on the furthest of the right. In the past, she has been Eurosceptic. Do Italians win elections if they're seen as Eurosceptic? Would this really go against some of the values of the European Union? Could we talk about Italexit, or is that a thing of the past?
I think in the past, all the right-wing parties in Italy have been very Eurosceptic. I think this is changing and continues to change. And probably, if they get into power, that will move again. There are some important elements which have been building up in the last months, including the positioning vis-a-vis the Ukrainian war and so on. Obviously, Italy will be a more challenging partner in Europe, but I don't think there will be any discussion about Italexit or Euro exit
or anything like that. Fabrizio, thanks so much. As always, Fabrizio Pagani, their Global Head of Economics and Capital Market Strategy at Muzinich, and he stays with us. Now, up next, we'll have plenty more on, for example, Netflix. Now, we had some encouraging number from Netflix. It's actually gaining in today's trading session. This is after losing fewer subscribers than expected. We'll have plenty more on that. Look at that, gaining 7% as we speak. And then we also look at Gazprom saying it will resume flows through Nord Stream tomorrow. Europe targeting a major cut in demand, though. So we'll have plenty more on that next. This is Bloomberg.
companies now, they're getting hundreds, maybe even thousands of applications. So software has come in to automate the process.
You want to write your resume for robots, not for humans. The only job your resume has is to be comprehensible to the software that is reading it, because that software or robot is going to decide whether or not a human ever gets their eyes on it.
These things are programmed by a certain segment of the population that might not be totally inclusive or not be fully aware.
Concerns about how this technology could exacerbate discrimination. For the FTC, I think foremost, the FTC needs to be making sure that we're fully understanding this technology.
We don't trust companies to self-regulate when it comes to pollution. We don't trust them to self-regulate when it comes to workplace comp. Why on earth would we trust them to self-regulate AI?
Lots happening on Wall Street.
It's the basic law of economics.
It validated what the market was already pricing.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
It's a challenging dynamic.
We could continue to see that kind of strength.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
Economics, finance, politics. This is Bloomberg Surveillance, early edition of Fronting Hill in Rome. Now, the EU is set to propose a voluntary 15% cut in natural gas use by member states starting next month. The continent will face an enormous challenge this winter, ensuring that there are enough gas supplies to fuel power generators. Now, energy giant Gazprom will restart gas exports through its Nord Stream 2 pipeline to Europe on Thursday, but at reduced capacity. So let's get straight to our person on the ground, our expert in all things gas, Bloomberg's John Ainger, he's in Brussels. John, so first of all, how likely is it that flows will restart through Nord Stream 1 on Thursday, tomorrow?
Well, of course, in the current times, everything is always up in the air, but we think flows will restart. Russian President Vladimir Putin has signaled as such that they will restart, but albeit with some conditions. So we don't exactly know by how much flows will resume. It could be 20%, it could be a bit more. There's still a lot of fighting over a gas turbine, which helps push gas through the pipe. And that seems to be a key bone of contention. But of course, the EU isn't wasting any time. It's preparing for a worst case scenario of a full cut-off. And so today we will be getting a plan on how the bloc plans to reduce energy demand, which is a key side of the equation and one that up until now it hasn't really addressed.
Thank you so much, John Ainger there in Brussels. We're back with Fabrizio Pagani from Munich. Fabrizio, we're talking a little bit before, of course, about this cost of living, the inflationary pressures that are not only taking hold of Italy, but the rest of Europe. First of all, is it a given that there's some kind of gas embargo from Russia, or do you think there's still room to maneuver?
I think we should prepare, as there is a full gas embargo. That's what we should do.
So this is Plan B. What does that mean for Italy? Is the Italian government and the energy minister able to secure side deals to make sure that Italy, one of the most affected, of course, by this gas embargo, can be somehow, if not protected, do better than otherwise?
The Italian government has already done much on that. There has been this recent mission to Algeria by Draghi himself and the Minister of Energy Cingolani. Algeria has become now the major gas provider to Italy. Is replacing Russia by 40%. And I think other geographical sources are coming up. Azerbaijan, but also Sub-Saharan Africa. ENI has been very active in that sense. So I think in some way Italy can become a hub of gas for the rest of Europe. We need to make sure that bottlenecks are solved, and also from the regulatory point of view, there is really a free flowing of gas across the continent. So there are technical and infrastructure issues, but also regulatory ones.
At what price? So is inflation in Italy and Germany Germany going to be much higher than anywhere else in Europe?
In Italy and Germany, inflation is basically due to energy cost, as you know. It's gas and oil. Oil is a global market, and we have seen that there has been a drop. There is a lot of volatility, and does not really depend on so much on what the Italian or German government can do. As far as gas is concerned, I think indeed there are three things which can be done. One, more sources and geographical sources. Diversification in the energy mix, so more renewables. There have been a lot of more renewables in Italy since the beginning of the year, thanks also to the simplification process which has been done by the government. And the third is some conservation. I think we need some measures which facilitate, let's say, nudge a bit the consumer to consume less and less.
Fabrizio, talk to me a little bit about central bank expectations. So if you look at the ECB, I mean, it's incredible some of the market moves that we've seen. I think there's 50% of the market that now expects a 50 basis point hike tomorrow. I was on a panel, asking Christine Lagarde about this. She was very muted on it just 2 weeks ago. Do you think they'll go for 50?
I don't know. Frankly, I don't know. I'm a bit puzzled. I think whatever they do, they need to communicate that. In the last meeting in June, they wrote that there will be a 25 basis point. I think, anything which could surprise market, it would be detrimental. I think we need stability. We need to stay the course. And we need a clear path towards the rate hikes.
But if the market reprices for them, it means that it's been communicated somehow, or no?
I don't know. Let's see what the market does tomorrow if they do it.
Okay, let's see traders hide under their desks.
Yeah, 50% is half of the market, then
Yeah, so half has it wrong. Fabrizio, thank you so much. Fabrizio Pagani, there, Global Head of Economics and Capital Market Strategy at Muzinich, joining us from a very, very hot room. Now let's turn our attention to big tech. After losing more than 1 million customers in the first half of 2022, Netflix has a message for investors. It could have been worse. Now, the leader in paid streaming TV lost 970,000 subscribers in the second quarter. That was less than half what Wall Street had feared. And that's thanks in large to large parts of a new season of Stranger Things, the service's most popular English language series. Well, such fan of Stranger Things is Alex Webb. He can't get enough of it. Right, Alex? And he joins us now to talk about Netflix. So, Alex, what is now Netflix getting right that they were getting wrong before? Lies?
Well, no, Tom was saying earlier, Tom knows very well I'm not a big Stranger Things fan. But the thing that's interesting, clearly, Stranger Things is a hit. And the expectations yesterday were very low. And in that sort of situation, any surprise to the upside tends to get quite well received by the market. That's certainly what we're seeing in the after-hours trading. It spiked as much as 10% at one stage, the share price. It was up at about 5.5%. Well, there we're seeing 7.5%, 7 and a bit percent now. The expectation was for it to lose 2 million subscribers. It only lost about 1 million, and it's telegraphing that it will have growth in this quarter's, the next quarter that it reports.
So, Alex, I mean, this is, a very basic assumption, but actually, if you have a show that everybody wants to watch, apart from Alex Webb, and it does very well, that's how you measure success. Do people actually subscribe to watch one single TV series?
So one of the big problems that Netflix has is what's known as churn, i.e. people who join, but then they leave again. And the disadvantage, of course, that streaming services have compared to the classic cable contract is a cable contract might have been 18 months, 2 years in some instances. In the case of Netflix, you can ditch it every month if you so desire. And what some people do is they sign up for a show they want to see. The moment they've seen it, they churn out, they unsubscribe. And that's accentuated by Netflix's approach, which basically dumps the whole series in one go and lets you watch it in one sitting. What they've done a little bit differently with Stranger Things is they split it into two, so they staggered the release. And the effect of that is that it should reduce churn to a certain extent.
Alex, does price matter? So if you're subscribed to, Discovery, I don't know what else, like Sky, Netflix in the UK and others in Europe, do you cut when inflation, comes, do you cut all three or do you cut one? Like what are subscription channels thinking?
Well, of course, different for every household. I think the expectation had been that Netflix would sort of be the base layer, that it's almost like the utility when it comes to streaming. Everybody has Netflix. They add something else on top of that. We're starting to see that maybe that isn't quite the case. It has been trying to increase prices to offset stagnating growth. That might also have affected some of its growth. People have seen that it's more expensive, and so therefore they go elsewhere somewhere cheaper. Some of its competitors have an advantage in the sense, particularly of Apple TV Plus and Amazon Prime Video, which maybe don't have as compelling an offering as Netflix, but their business model is different. Amazon wants people to subscribe so that then they buy things on Amazon.com, which a Prime subscription lets you do. Apple wants to make its devices stickier, to make, if you can only only mobile device in which you can access Apple TV Plus is an iPhone, then it incentivizes you to buy an iPhone, and that will be $1,000 of revenue every few years. So they have something of a competitive disadvantage when it comes to some of those rivals.
Alex, thanks so much. Alex Webb there with the very latest on Netflix. Now, in the meantime, we go back to the markets. We did see some relief, certainly on Italian markets, not only fixed income, but equities in general after that speech by Mario Draghi in Parliament. Now, we're expecting some kind of confidence vote. It could come a little bit later. It could also come early into the evening. But overall, stocks are rising, speculation that the worst of the year's equity rut may be over. And this comes even as concern of the potential for a global downturn seems to be sparking hawkish central banks. In Italy, the situation is Mario Draghi talking about rebuilding a coalition. The thinking is there is that he's willing to stay, and that seems to be giving a bit of relief to the markets. He did talk about a 4-point plan, so we'll go through that and see exactly what that means. For the fragmentation tool, Fabrizio Pagani was reminding me it's no longer called a fragmentation tool. It's called something much more fancy, like a transmission mechanism, which makes it more palatable to the hawks. And then, of course, it's also the disbursements of the funds from the Commission. Coming up, a fresh 40-year high for UK inflation, pressure on the Bank of England for a jumbo rate hike next month. We have plenty more on that story next. This is Bloomberg.
Energy prices and a short supply of key chemicals that produce synthetic fertilisers are sending pig, cow and horse manure prices soaring. Even human waste is in demand as farmers hunt for alternatives. Fertiliser helps increase crop yields.
You can see how much moisture is held into this. It's a lot of organic material into the compost, so it breaks down. The manure and the straw breaks down into a friable mix that can be mixed into your soil in the ground and for growing a whole range of different vegetables. Holds the nutrients in, holds the water in, and it really increases the kind of biodynamic profile of the soil.
The recent price spike could mean more farmers going organic for the long term.
Crypto, you have a world of young people that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
Italian Prime Minister Mario Draghi tells lawmakers that his fractured governing coalition can be rebuilt. Italian bonds rally, the FTSE MIB pairs losses. Coming in hot, UK inflation hits 9.4%, intensifying the cost of living crisis. And Sea of Green, Netflix surges on better-than-expected subscriber numbers, boosting stocks. Well, good morning and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacroix here in Rome, looking at the rooftops, looking at Italian politics, and frankly, melting. It's very hot, and a lot of the jokes around when you go to the cafeterias or the bars is actually what's going on in Parliament. Maybe the heat is also melting parts of their brains. Now, a fresh 40-year high for UK inflation. Consumer prices rose 9.4% from a year earlier, heaping pressure on the Bank of England to deliver a jumbo rate hike next month. Let's get more now with Bloomberg's Lizzie Burden. Lizzie, good morning. So will the CPI print today, which 9.4%, I mean, it's high, it's very high, change the Bank of England's thinking?
It's very high. It's just a very slight upside surprise. It hasn't rocked markets, but I have to say that's because markets already expected a 50 basis point hike from the Bank of England in August. The question is, will it convince the policymakers of the Monetary Policy Committee? Well, maybe, because it makes a persuasive case. It's driven by food and fuel, so it's going to hit consumers where it hurts, but it's also widespread, so it's likely to be resilient. And don't forget, inflation in the UK is heading towards double digits in the fall, so this isn't even the peak. When you listen to the commentary out of the Bank of England recently, after the last decision, they said that they were prepared to act forcefully to return inflation to target. Just last night, Andrew Bailey said that 50 basis points were on the table. So when you throw in yesterday's jobs data, the fact that firms' inflation expectations remain elevated, our economists at least do think that a jumbo rate hike is coming in August, and it'd be the first in the bank's independent history.
Yeah, I mean, a jumbo rate, you know, the Fed, and I'm sure the ECB will take notice if they haven't done it themselves before. Lizzie, thanks so much. Lizzie Burden there looking at the UK. Now, today is also a crucial day, very crucial day in Italian politics here in Rome, as a coalition government could collapse. The Prime Minister Mario Draghi has been addressing lawmakers and has told the Senate that his coalition can be rebuilt. So let's get straight to journalist and really expert in all matters parliamentarian. He's Francesco Becchis. Francesco, thank you so much for joining us. I mean, there's so many questions about what this means for the future, what this means, of course, for the future of Mario Draghi and some of the reforms. How do you see this playing out? Mario Draghi stays, but for how long?
Well, Francine, thanks for having me. It's hard to say. We know that Mr. Mario Draghi today came to the parliament with and is willing to stay. He's speaking right now as we speak. And he said that he's willing to stay where he is and to keep up with the reforms, but he needs, of course, the support of all the political parties that 1 year ago gave their support to the National Unity Government. Of course, as you said, there's a joke today in Rome, we're not the only ones melting right here, but the politics is melting too, and the government. And we'll see if there's a way out for Mr. Draghi, or if actually the five-star movement will turn back and give their confidence vote to the...
But he doesn't need all the five-star movement, right? Just to make it clear, I mean, as long as he has enough of a majority, does he get weakened to a point where he can't put the reforms through that put the access to the EU funds at risk?
Well, that's what makes this crisis really hard to explain to abroad, because actually Mr. Draghi
I've tried this, and usually it's like in 30 seconds.
Well, I saw that. Yeah, he doesn't need the five-star movement, but he says that that was the mandate 1 year ago to form a national unity government, and now he needs all the parties to step up and support him. Mr. Conte is unlikely to give his confidence vote, so we'll see if the League and Mr. Salvini will try to save the government and give their support.
Okay, if we go to elections, and you're really the expert in all of these like Italian politics, and again, if you're looking from abroad or an international investor, you think, what, they have so many parties? The coalition is with, what, 7 parties? I mean, could we actually see a coalition with the right that could be Eurosceptic, or is this a thing of the past?
Well, it's not really a thing from the past, because we know that the center-right coalition still is a bit Eurosceptic. The Brothers of Italy with Giorgia Meloni still are very critical with the European Union. But I mean, things changed this last year, and we have a very different right from 2 years ago when there was a league at the government. So we'll see. Of course, the Brothers of Italy is leading the polls, and they want to go to the vote. But I'm pretty sure that Salvini and Mr. Berlusconi will still. I'm still evaluating what they're gonna do this afternoon.
So the Brothers of Italy, basically to the right. I don't know whether you describe them far right or
well,
to the more of the right, certainly than what we
right.
have in the current coalition, would get what, 23%. What kind of policies would they put in place that would be of interest of an international investor?
Well, they've changed a lot in the last years. Giorgia Meloni now has opened her party to the business environment, and I have to say that she has very good ties with the business and the industry in Italy. She's not the old far-right leader that she used to be. So, and also, as regards the European Union, they have changed so much in their agenda. They're willing to stay where they are, and in the European Parliament, Giorgia Meloni is heading the Conservative Party, which is not as Eurosceptic as the party where Mrs. Salvini is in Brussels. So,
can the five-star movement survive this? So again, in Parliament, there's about 30 parliamentarians that we understand could also look at forming their own party. We have the foreign minister, Mr. Di Maio, formerly a five-star, with his own party. I mean, how many parties does the five-star party make up? It's like, they're sprawling and having children.
Yeah, we're still counting. I mean, in the lower house, as you said, it's very likely that 20 or 30 parliamentarians will be leaving the five-star movement. But I mean, today the biggest challenge for Mr. Conte is to get back some votes before the elections and not MPS in the parliament. So
yeah, do you think Mario Draghi will be weakened from this, or he had a very forceful speech where he almost seemed angry at times? Like, this was probably Mario Draghi, the politician that we'd never seen before.
Yeah, you're right. He's doing his best, and unfortunately, he is likely that he will be weakened anyway, because I mean, in the last 6 months before the elections, all the parties will try to, fight for their own battles and earn votes. So that's really a hard job for the one who stays in power.
Francesco, if Italians go to vote tomorrow, will they vote on the economy? So is it all about Russian gas and inflation, or do they have other concerns?
Well, I guess they will be voting mostly on social concerns, and we know that the energy crisis is really having a huge impact on householders and families. So I guess the international stage and the business is not really, they're not the first thoughts.
Francesco, thank you so much for joining us. That was Formiche.net, Francesco Becchi's journalist, and we'll have plenty more, of course, from Rome throughout the day. The focus, of course, is on the markets. The markets seem to be taking it into their stride after that Mario Draghi speech. They believe that he will stay. They believe that he will manage this period of volatility. Coming up, we'll have plenty more from Rome. We'll look at the markets. We'll talk about inflation. And also, we speak to the Eurogroup president and the Irish finance minister, Pascal Donohoe. Maybe he has a thing or two to say about taxation, for sure, and he'll maybe have a thing or two to say about this new ECB tool. We'll ask him shortly. This is Bloomberg. Well, good morning, everyone. I'm Francine Lacqua here in Rome, where we're covering the political crisis in Italy with Mario Draghi. We think the markets certainly believe that he will stay. Now let's get straight to the Bloomberg Business Flash. In London is Leanne Gerrans. Hi, Leanne.
Hi, Francine. Twitter has scored an early win against Elon Musk in its fight to make him complete his $44 billion buyout. A Delaware judge has agreed to fast-track the case with an October trial date, despite Musk's legal team arguing that Twitter was unfairly pushing for an early trial. Twitter shares jumped as much as 5.4% after that ruling. Now, Netflix shares surged after results showed subscriber losses weren't actually as bad as expected. 970,000 subscribers were lost in the second quarter, about half of what Wall Street expected. The streaming service expects to return to growth and sign up 1 million subscribers in the current quarter. Now, Volkswagen's most affordable vehicles will share more parts and factories to boost efficiency. That's the message from the new head of VW's main car brand, Thomas Schaefer. In an interview with Bloomberg, Schaefer says Volkswagen's brands have wasted too much time being preoccupied with each other rather than competing with other car makers. Now, Cathy Wood's ARK Investment Management is pulling the plug on an ETF for the first time, closing down ARK Transparency. The ETF gained only $12 million in assets since launching at the end of last year, a fraction of the $9 billion in Woods' flagship fund. The Transparency ETF was a rare passive vehicle from ARK, which is better known for focusing on active management and disruptive innovation. And Carrefour is selling a controlling stake in its Taiwanese retail operations to local partner Uni-President Enterprises. The deal gives the unit an enterprise value of just over $2 billion and is expected to close in the middle of next year. Carrefour is refocusing on its core regions in Europe and also Latin America. The French retailer set up its first outlet in Taiwan in 1989. And that's your Bloomberg Business Flash. Francine.
Leanne, thanks so much. Leanne Gerrans there. Now, Goldman Sachs President John Waldron says the Fed is making the right moves to combat surging inflation. He spoke with Bloomberg about how small businesses are being affected by the current economic conditions.
Number one, in many of the small businesses with whom I talk to here at the summit, is workforce. We understand that small businesses are the engine that drive the economy and drive this nation. And so we are very aware of the challenges in the economy with the inflation and the supply chain challenges. We also know that we can make a great impact. And we're able to apply many of the learnings that we've received in the Goldman Sachs 10,000 Small Businesses Program to navigate those challenges. And so when we put people to work, we're making an impact in our community, we're making an impact to the tax base. So I am optimistic about what's to come in light of inflation and the supply chain. And from what I'm hearing from my peers here, which is the largest gathering of small businesses to convene in the nation, they're optimistic as well. And in the past 2 years, they've had tremendous growth in spite of the pandemic, in spite of the lockdowns, and we're looking forward as to what's to come in the next 12 to 18 months.
You talked about labor and employment being one of these high issues. Yesterday, you had earnings at Goldman Sachs, and there's this line that everyone's talking about, slowing hiring velocity. Are you recalibrating for the next phase? Are you preparing for slower growth? Well, what does that mean?
What it means in plain English is we're hiring fewer people, but we're still hiring.
it's an important distinction. We've hired a number of people in the last couple of years as we've executed on our growth plan. We've grown the firm quite considerably. We've built new businesses and new platforms, and we've needed a lot of incremental people to execute upon that plan, and we still do need those people, and we're continuing to grow. But we are going to grow at a slower pace in light of the economic situation that we see in front of us now and that we forecast could get worse from here. So we have to plan and calibrate accordingly. But we continue to invest in our human capital. We will continue to hire. We will continue to grow.
And what's also coming back is those reviews at the end of the year. So potentially planning to get rid of more people that are maybe weighing down the business?
I think there might have been some confusion in reaction to what we said. We always do performance evaluations at the end of the year. We always like to give our people feedback. That really has nothing to do with whether we're reducing headcount or increasing headcount. It's giving feedback and evaluation to our people, which is the right thing to do as you're developing your human capital.
The other thing Jessica mentioned was inflation. And I have to ask you, in January, you were quite critical of the Fed. Potentially they were behind the curve. You even said at this point we should bring back Paul Volcker. So far, are you satisfied with what the Fed has done?
I think you're seeing the Fed move quite aggressively and, in my opinion, very appropriately to get on top of what's significant inflation building in the economy, and clearly trying to front load a lot of the moves, policy moves, to try to deal with inflation. And so we at Goldman Sachs are impressed with what they're doing. We expect them to continue to be aggressive in combating inflation, and I'd say so far so good.
Well, that was Goldman Sachs President John Waldron and Jessica Johnson-Copper speaking to our very own Anne-Marie Harder. Now, we'll have plenty more, of course, on Europe, on the Italians and the crisis that we're seeing at the moment. Coming up, the Eurogroup President and the Irish Finance Minister, Pascal Donohoe. That interview is next, and this is Bloomberg.
city of Jamnagar is a money-making machine for Asia's richest man, Mukesh Ambani. His company Reliance has the world's biggest oil refinery complex here in the city. Jamnagar is also where Ambani is making his newest bet, a $10 billion investment in green energy. His ambition is closely aligned with the Indian government's plan to reach net zero emissions by 2070. But Ambani is not alone. India's second richest man, Gautam Adani, has committed $20 billion of investment over the next decade. But India's massive dependencies on fossil fuels have some environmental advocates questioning the realism and sincerity of those green ambitions and those of its two biggest billionaires.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lackwin. I'm here in Rome covering the political crisis. Now, Ireland's inflation rate for June came in red hot at 9.1% year on year, firmly above the euro area average. This, as the European Commission says, it expects the Irish economy to expand this year by 2.6%. Well, we are delighted to be joined by the Irish Finance Minister, but also Eurogroup President Pascal Donoghue. Thank you so much, Minister, for joining us. I have a number of questions on inflation, on how Europe will fare in the next couple of months, and then we need to talk about taxation. But first, should we assume now in our economic projections that we will have a gas embargo from Russia with all of the inflationary pressure that ensures?
Well, we have recognized, Francine, for some time within the European Union that this is a risk and that the nature of this risk is likely to become clearer tomorrow. And that is why within the European Union, steps have been underway now for many, many months to build up our inventories of energy, particularly of gas. And it is also why today the European Commission will be bringing forward proposals to help us manage these kind of energy pressures later in the year. So it's been recognized as a risk, and we will take any steps that we can to mitigate the consequences of it.
So what kind of steps should we be thinking about at a Eurogroup level as we get into the winter months and people need their heating? Is it right to start thinking of a plan to use less gas now to make sure that we're better prepared for the winter?
So many governments within the European Union are already issuing guidance to their citizens regarding energy consumption in the time ahead. And I believe what will happen when the Commission publish proposals and governments also begin to lay out their own plans with regards to this, is you'll see two areas receive particular focus. The first one is how we can better manage consumption within economies, particularly if there is going to be pressure in supply. And then secondly, what we can do to build up inventory if we do face a challenge of reduced supply for a period of time. Of course, all of this will be happening in the context of the European Union looking at what we can do to accelerate our movement to dependency on renewable energies. But that is going to take time, and in the time that is ahead, it will be about how we can manage supply in a way that mitigates the economic risk.
Yeah. Are we expecting too much of central banks? Tomorrow there's the ECB decision, of course, on interest rates, markets pricing in a 50% chance that there's a 50 basis point hike. Are we expecting too much of central banks in dealing with inflation?
Well, what you're seeing happening within the European Union and indeed elsewhere is central banks act to deal with inflationary pressures that are broader. What we recognize is that if higher levels of inflation become embedded within the European economy, not only does it pose such a challenge to living standards today and to income and to jobs today, it also poses a real risk to the ability of the economy of the euro area and the euro area to grow in the time ahead. So the ECB will take the steps that it believes are necessary to deal with such an inflationary risk, and they've already indicated in recent meetings their thinking with regard to this.
Yeah. Minister, I know there's also reports that you're preparing, or that the Irish government is preparing to put a levy on the windfall tax on energy companies. When will you actually make a decision on this?
Well, this is only something that every other government in Europe is giving some analysis and consideration to. But I'm equally aware of the difficulties and challenges in doing this. If you look at where we are within Ireland, much of our energy supply comes through semi-state organisations that have played a really important role in the development of our energy needs over many decades. If there is a need to raise more funds from those organisations, it can be done through changes in dividend policy as opposed to changes in taxation policy. And I'm very much aware of the need to get the balance right between having stable and appropriate taxation on the energy sector, while also recognising the fact that they need to invest and we need their investment in moving to alternative and more secure sources of energy in the years ahead. So at the moment, all this has been done is given consideration, as other governments are doing, And I'm very much aware also of the risks and consequences that need to be managed in any sudden or arbitrary changes in taxation on the energy sector.
Minister, I also want to ask you about the OECD tax deal, because we understand that there's a chance now that actually wouldn't get passed through Congress, which is something that Secretary Yellen had assured it would. Does that change your thoughts on the OECD tax deal?
So the OECD process is unfolding exactly as I expected it would. This is a huge global endeavour. And as we move towards agreement, from agreement towards implementation, there are always going to be political developments. There will always be moments in which parliaments and governments consider where they are and where the next step forward is. I still expect, as we move through this year and as we move into 2023, that we will see the second pillar of that OECD agreement in regard to a minimum effective tax rate for that pillar to be delivered. I'm not going to comment on what may or may not happen within American politics. It wouldn't be appropriate for me to do so. But overall, I still believe we'll make progress on it within the European Union. And I believe globally, later on in the year, we will see progress on that rate. I'd make the point very briefly, Francine, that if we do end up in a position where no progress is made on the rate, it will pose a challenge to the overall OECD agreement and open up new risks, new challenges, and the risks of unilateral action. And I believe it's in our interest to avoid that, which is why we should work hard to implement the OECD agreement.
Minister, thank you so much. Next time you're in London, I'll be sure to be there as well. The Eurogroup President, Irish Finance Minister Pascal Donoghue. Now, we'll have plenty more, of course, on Bloomberg Surveillance Early Edition. We'll bring you all the latest market news from New York and London.
That it's highly transmissible. We know that 2 doses of vaccines, Pfizer vaccine specifically, neutralize the virus, but not as efficiently, because various studies showing that reduction up to 40-fold, meaning that a 3rd dose is a must for it to successfully neutralize the variant. What we don't know is still that what are the effects of mix and matching between vaccines, and what are the capabilities of antibodies produced from this mix and matching in neutralizing Omicron. Because as we know, many parts of the world use different types of vaccines. And that would be a great data to look at. It will be also great to look at, because majority of the studies done uses a small sample number, and most of the time when you translate it to real world, the data changes. So it will be really good to look at large-scale data of the ability of antibodies from vaccines to neutralize this variant. Grateful here today that the virus, Omicron variant, still uses ACE2 receptor as its main entry. It means that all of the vaccines which are designed with spike in mind still works. Imagine if it uses a different receptor other than ACE2. None of the vaccines would work today. So I think that is the best news that we got from all these studies which came recently, the past couple of days.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Wherever you get your news.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia.
This
is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg.
We all seem to have our hand on the bunker door.
A key message is patience.
I think the Fed has a really hard time.
I agree that sentiment is quite low.
What really is the issue going forward now is how much is the economy going to slow? How much is nominal GDP going to slow? And what does that mean for earnings?
This is Bloomberg Surveillance, Early Edition, with Anna Edwards, Matt Miller, and Kaylee Lines.
It's 10 a.m. in London, 5 a.m. in New York, and 5 p.m. in Hong Kong. Our top stories today. Netflix predicts it will return to growth after losing another 1 million customers. Tesla is the next big tech company to report. The electric car maker will reveal just how much that China lockdown has hurt. Italy's Mario Draghi says his governing coalition can be rebuilt. We are live in Rome for the latest. And that Russian pipeline will resume sending gas to Europe. But first, Vladimir Putin has some conditions. Meanwhile, the EU wants members to cut back on their gas use just in case Russia cuts off supplies. Welcome to Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Matt Miller and Kaylee Lines over in New York. And Kaylee, a lot of reasons to feel a little bit cautious here in Europe. Yes, stocks are higher, but not necessarily with a great deal of conviction. US futures also a little bit higher, but not much.
Well, you definitely saw more conviction in the Asian session overnight, Anna, following on from the big gains we saw here in the US yesterday and the optimism on tech in particular after Netflix beat expectations after the bell. So all of that collectively lifting Asia stocks higher really across the board. Some of the outperformance coming from Japan with the Nikkei up about 2.7% and Chinese tech stocks getting a nice lift as well. The Hang Seng Tech Index was up about 1.5%. Now, of course, in China, there are ongoing concerns around the COVID-0 policy as well as the turmoil in the property sector with now suppliers halting payments to some of those developers given the fact that the developers aren't necessarily paying the suppliers for the materials as a lot of those projects are stalled. Plus, you didn't have any easing of policy overnight, those loan prime rates remaining unchanged. So all of that together is weighing a little bit on the Chinese yuan today. It is weaker against the dollar by about 0.2%, trading in and around 675. And finally, I would just note in the Chinese bond market that yield on the 10-year coming in about 2 basis points at 277 or so. That is the lowest level going back to May, Matt.
All right, interesting stuff. We had a ton of conviction in yesterday's session. The cash trade was up almost 3% on the S&P, and everything was green. So it's not surprising to see a little bit less of a move to the upside on futures today. Nonetheless, the arrow is still green, and investors are actually buying a little bit of 10-year debt right now, pushing the yield back down to below 298. Normally, when you see buying in treasuries, you might think that's a safe haven play, so you'd expect maybe a little bit less enthusiasm for risk assets. But when you see the yield go below 3% especially, or anywhere around these levels, it puts a little bit of upward pressure on risk assets, on S&P futures, and then the cash trade at 930. NYMEX crude coming down, which also is supportive of a further rally in stocks. So it is still at a relatively high level, 103.40, but at least we're coming off, and I've got a fantastic chart to show you about correlations later with energy down, stocks up. We're going to talk about natural gas because I think that's really the big story of the day is that Nord Stream pipeline. And then Bitcoin right now up about 0.1%, but back up over $23,351 after that fantastic Bloomberg Crypto Summit that we had here in New York yesterday. Anna?
Yeah, absolutely. I look forward to hearing more about that summit shortly. Here on the European equity markets then, in positive territory, but as we were saying, not a great deal of conviction, just like in the United States, buying equities, but also buying bonds, something of a staging post today, perhaps, as we head towards the big news of tomorrow with the ECB. We've got a lot going on today, though, in Italian politics and that natural gas story that Matt referenced. So this is the picture on European stocks right now, but let's roll on and show you some other assets and how they are performing. And we'll start with Italy. We have Italian 2-year yields on the move, as you can see. So So even if the bond markets have been getting themselves pretty nervous about whether Prime Minister Mario Draghi was going to resign, it does seem as if we've got some continuity there. He does say his governing coalition can be rebuilt. We'll get an update from Francine Lacqua in Rome in just a moment. But that has taken the edge off Mario Draghi here to calm the spreads, it would seem. And those spreads are tightening. Yields are coming down in Italy. I've got the benchmark natural gas price in the chart for you as well, because as Matt was saying, really big developments there. Yesterday, we were getting a lot of reports that suggested, lots of sources were saying, you know, the taps are going to be turned on Thursday. We just don't know to what extent. This is the flow of gas from Gazprom in Russia into Europe. And now we've got the endorsement of President Putin, but he does say there are conditions attached. We wait to see if that key equipment is installed that's coming through from Canada and what level of flow that then results in, and of course, where the politics takes us on that as well. Sticking with the gas story, Uniper is trading up by just shy of 14% in the German session. This is a big gas player over in Germany, and they're seeking a bailout from the German government. Are we getting a little bit closer? That seems to be the latest narrative, and that pushes the stock up. ASML, this Sakali is a company we've talked about before, huge giant of the suppliers to the tech sector, suppliers to the chip makers. They make those vast lithography machines. They're under pressure on the geopolitical front, and indeed hiring, it seems, could be an issue for them in the future. Right now, they have issues with accounting, and when they can record their revenue, they had to cut in half their revenue growth expectations for the full year, and the stock has been weaker today.
Okay, Anna, well, we're watching that stock today, but there's plenty of other stories we're watching in the day ahead, including politics in the UK. Conservative MPs will decide which two candidates will face off in the battle to replace Boris Johnson as UK Prime Minister. The result of the fifth and final ballot of Tory MPs will be announced at 11 a.m. New York time. Plus, speaking of Italian politics, which Anna was mentioning, Prime Minister Mario Draghi will face a confidence vote at 1 p.m. New York time. Of course, that follows his remarks earlier saying his coalition can be rebuilt. And finally, more tech earnings coming after the bell. Tesla will be reporting post-market today, Matt.
All right, we're going to get caught up on all of those numbers as well, but let's get back to the political story. Italy's Prime Minister Mario Draghi told the Italian Senate that his fractious coalition can be rebuilt. This tampers down concerns that he'll quit the government soon.
And the only path, if you want to stay together, is to build this pact right from the beginning with courage, with altruism, with credibility.
Bloomberg's Francine Lacqua joins us now from Rome. And Francine, when it comes to political volatility in the West, nothing can top Italy. They're showing it again.
You're absolutely right, Matt. But you know what really surprised me, and you can't really hear it because of the translator there? This was a fired-up Mario Draghi. I mean, I've been following him at the ECB and as Prime Minister of Italy. I mean, this was an angry, this was an, political animal almost, Mario Draghi. It's like the first time you hear your dad swear, and he's put certain conditions on him staying. Now, it's quite unclear. The market believes he'll stay because he has the arithmetics in Parliament to go through, but frankly, it's quite unclear how the various factions will position themselves. So there's a vote a little bit later. They have 4 hours to discuss it. And again, at risk, if he stays, fine, the market continues on its way. If he doesn't, and we go to snap elections, this means that actually the distribution or the funds from the EU could be in jeopardy. And it could also change the way that the ECB sees this fragmentation tool, because what they don't want to do is give Italy a free pass if there's political turmoil.
Francine, thanks very much. Bloomberg's Francine Lacqua reporting from Rome. Italy's political drama comes amid an economic and energy crisis in Europe. Russian President Vladimir Putin has signaled that Europe will start getting gas again through a key pipeline, but warned flows may be tightly curbed. The EU is set to propose a voluntary 15% cut in natural gas use by member states starting next month on concern Russia may halt supplies. And of course, even if they restart on Thursday, at what levels and for how long will be a question we will ask often, no doubt, here in Europe. Now, let's turn our attention to big tech, though. After losing more than 1 million customers in the first half of 2022, Netflix has a message for investors. It could have been worse. Seems to be that message. The company lost 970,000 subscribers in the second quarter, less than half what Wall Street feared, thanks in large part to a new season of Stranger Things, the service's most popular English language series. Bloomberg's Alex Webb joins us now with more details. It's not all about Korean dramas this time around. It's about Stranger Things, and Stranger Things happening in subscriber numbers over at Netflix, Alex.
Yeah, when we were talking about Netflix yesterday in anticipation of the numbers, we were saying that any surprise to the upside would be positively reflected in the stock, and ultimately that's what we saw. The market had been expecting a loss of 2 million subscribers. Ultimately, it was closer to 1 million, and so So we've seen the stock, I think, up 7% last time I saw in pre-market trading. So that is clearly the good news. Looking forward, they're still expecting, the market had been expecting 1.8 million subscribers in this quarter. It's not looking like it's going to be that sort of number, but that does perhaps leave some room to surprise.
Okay, Alex, well, there's a lot of tech stories to keep on top of this morning. Another one being that Twitter has scored an early win against Elon Musk in that fight to make him complete that $44 billion buyout. A Delaware judge agreed to fast-track the case with an October trial date, despite Musk's legal team arguing that Twitter was unfairly pushing for an early trial. Meanwhile, over on Elon Musk's other area of focus, Tesla is going to be reporting earnings after the close today. Alex, what can we expect from that?
So there's a lot of expectation on the supply side. They will have had quite a few issues. The factory in Shanghai had to close down because of the lockdowns there for quite an extended spell. They're also spending a lot to expand production in Berlin and Texas. The thing that I find particularly interesting is whether they can show that demand remains high. But there's a number that's quite interesting, which is the revenue per employee that they have. And you look at this chart, you can see that white line there is Tesla. And even though it's quite a young company, and you'd think therefore a bit more efficient, it doesn't make as much money per employee as its established rivals like GM, Toyota, and Ford. And so it's cutting jobs at the moment. If those efficiencies have started to kick in, that will be good news for the market and show that it's starting to act more like a grown-up car company.
Alex, thanks so much. Alex Webb there talking to us about what we can expect from Tesla later on. Now, it's fashionable in the crypto winter wreckage to talk about failures in risk management and regulatory gaps, both of which were among the themes of the Bloomberg Crypto Summit yesterday. Take a listen to some of the highlights from our conversations with industry leaders.
Luna was the first kind of part of this crisis, and it started a daisy chain of events.
Some of this is herd behavior. Some of this is not a crypto-specific phenomenon. Some of this is like what investing looked like at sort of peak mania.
The fundamentals of Bitcoin and any viable investment thesis hasn't changed.
I think the worst happened, and now we're rebuilding. Sometimes volatile days can be good for profit, but in the long run view, like, we like it when markets are healthy and efficient and going up and stable.
My heart doctor lost $1 million in Celsius of all his Bitcoin and was really upset. Now I'm thinking about him having to worry about his heart instead of him worrying about my heart.
How healthy the ecosystem is in the long run is going to be a very strong predictor of how much we can grow.
People aren't going to give up on crypto. What we really want is an open, true, fair marketplace.
Web3 and crypto is perhaps the answer that they seek, to have both a capitalist system that can also be equitable.
Bloomberg Sonali Basak was part of our summit coverage and joins us now for more. So we heard a lot, Sonali, of people saying, oh, it's been bad and we should have been paying more attention. Regulators maybe should have been involved. But the bottom line is a lot of people lost a lot of money, including Michael Novogratz's heart doctor.
And his wrestling coach.
Oh.
And so it's interesting. A lot of things are going to have to change. So much soul searching. And remember, some of the soul searching is a good thing in the sense that you are seeing Bitcoin hitting another low, rising another almost 7% over 24 hours. And what's going to change exactly? From Mike Novogratz's perspective, you hear that story about his heart doctor and his wrestling coach. And the whole idea here is that consumer protections need to change. And he was saying that if the industry doesn't self-regulate, the SEC is going to be doing it for them. The other thing about this is investor behavior. When you think about how Elon Musk waived due diligence on that Twitter deal and everyone thought that was bold, apparently, this is happening all the time when it comes to cryptocurrency investments. So the talk of the town yesterday was really a lot about how venture capitalists have to ask for information, again, about the cryptocurrency companies and ventures that they invest in, which is, normal course of business and other ways of investing.
Yeah, and my other takeaway from the summit was all of these people in this space, while recognizing the volatility in the short term, are still incredibly bullish on at least this technology over the long term. Bloomberg Sonali Basak, thank you so much, and great coverage at the summit yesterday. And of course, billionaire Sam Bankman-Fried of FTX is the subject of today's big take as well. You can read all about it online at Bloomberg.com or typing an iBigTake into your terminal. Let's head over to Washington now. The Senate has voted to begin debate on legislation to provide more than $52 billion to the American semiconductor industry. It's a major milestone for the long-stalled bill. Meanwhile, lawmakers have failed to make progress on tackling climate change after a key senator blocked legislation. That would be one Joe Manchin from West Virginia. So President Biden is set to announce executive action to confront climate change today. Anne-Marie Horder, Bloomberg Washington correspondent, joins us now from D.C. with more on what we can expect. Anne-Marie, what exactly will these executive orders look like?
Well, the president's going to outline his plan today on some of these executive orders, likely some money going to some administration units under FEMA, potentially for the wind farm industry, and then he's going to talk about more actions he will take. But we should note, something the administration is weighing right now, but do not plan to come out with today, is creating this emergency declaration. That would give them wide scope to really tackle climate change in terms of propelling clean energy construction and even stopping fossil fuel use. The issue the administration has and the White House is weighing is this really comes down to the delicate dance of politics. If they were to go ahead with that, it potentially could alienate Senator Joe Manchin, who last week, of course, blocked these climate change provisions and tax hikes. At the same time, they still need him in this 50-50 Senate, especially as they're still debating things like health care provisions and legislation. So it's politically tricky for them. But today, the president wants to make clear that he thinks climate change is an existential threat, and you can expect more executive orders from the president.
All right, well, I believe he'll be speaking at 2:45 p.m. Eastern today. Bloomberg's Anne-Marie Horton in Washington, thank you so much. Now let's get back to the markets and take a look at some stocks moving in pre-market trading in the U.S. Alex Webb was just running us through the Netflix story, obviously a big beat and a big move for the stock as a result, but that is translating to other streaming-oriented companies, the likes of Roku and Disney, up 3.3 and 2.3% respectively. Another big mover, and this comes back to the crypto conversation once again, is Applied Blockchain. This is a stock that literally doubled yesterday, up 100%, although it went from just over $1 to just over $2, so we have to keep that in mind. But the rally continuing today, up about 13 percentage points. Part of that due to the broader lift we are seeing in the crypto space, the other part having to do with a 5-year deal it inked with Marathon Digital. Finally, one stock moving to the downside, Interactive Brokers. It reported earnings that missed expectations. Its daily trading revenue was down about 6% on a year-on-year basis, so that stock is down about 3.5% before the bell, Anna.
Kaylee, coming up on the program, we will deep dive into the Eurozone economy, especially the German economy and the risks posed to it right now. Holger Schmieding joins us, Berenberg's chief economist. He'll give us his views on the flow of gas and how important that will be. And Lorenzo Codogno, founder and chief economist at LC Macro Advisors and, crucially, former chief economist at the Italian Treasury. He will join us to give us his thoughts on what is currently going on in Italian politics and where today's developments leave us. And tune in tonight at 9:30 p.m. Wall Street for the full airing of The Next Big Risk on Bloomberg TV. Abby Joseph Cohen, Sam Bankman-Fried and Ken Moelis share their views on the end of globalization, the pandemic and the fading American dream. This is Bloomberg.
When you think of cutting-edge technology at sea, you might be thinking of stuff like this. But there's an incoming revolution on the high seas that isn't quite as sexy, but could be significantly more impactful.
Container shipping is the key component of global trade. About 80 or 90% of all the world's goods are transported at sea at some point.
But there's a significant unseen cost to the modern era of global commerce.
About 3% of all the world's CO2 emissions come from shipping.
3% may not sound like a lot, but that's roughly comparable to the entire CO2 output of Germany. Since reducing trade isn't a likely option, what about a technological improvement to help reduce the emissions from these well-stocked maritime behemoths?
Stagflation risks are building in Europe.
It's sort of a perfect storm hitting the European economy at the moment.
How will the European Central Bank respond?
The central bank will have its work cut out for it.
Tune in Thursday to a special edition of Bloomberg Surveillance for the latest news from Frankfurt, including ECB President Christine Lagarde's following news conference in its entirety.
Counting down to a big central bank decision.
Coverage starts Thursday at 6 a.m. from New York. Bloomberg, your global business authority.
Welcome back to Bloomberg Surveillance. This is the early edition. I'm Matt Miller with Kaylee Lyons here in New York. Anna Edwards with us out of London. Also in London, Dan Curtis, our star producer, Olympic-level rowing champion, put together this chart for me, which shows a big negative correlation between the prices of natural gas and risk assets, or European stocks in this case. That makes a lot of sense because every time Putin puts on the pressure, it seems to worry markets, and when we get evidence that he may let the gas flow, we feel much better. Tassos Vastos, a Bloomberg credit market reporter, joins us now to talk about the impact of gas flows on credit. Tassos, we're seeing this across all asset classes.
That is true, and now we're at the stage where we're actually feeling much better by what's happening. We have indications that Russian gas is going to start flowing again, even though it's going to be curbed and come with certain conditions, but the market is loving it at this stage. A gauge of credit conditions in Europe has become much better in the past 2 days, and that's because of the gas situation. There were some concerns that we're going to enter an energy crisis in Europe in the autumn months, specifically because we're not going to have the flow coming out of Russia. This seems to be alleviating at this stage, and the market is taking it very, very well.
Tassos, good morning. Another body, if you like, that's watching this very closely will be the ECB, because even if the two aren't directly linked, they won't want any of this distraction to be going on at a time when they've already got a lot to juggle, from Italian politics to the sky-high inflation rates across the Eurozone. The market seems to be kind of 50-50 as to whether we're going to get a 50 basis point hike tomorrow. What's your latest thinking?
Well, actually, at this stage, we're getting closer to the 50 basis points, at least when it comes to the market pricing that in, because 25 basis points at this stage seems to be very insufficient to deal with the sort of inflation that we're looking at the euro area at this stage. The ECB is well behind other central banks in that. They haven't raised interest rates in more than a decade now, so they have to keep up with the Federal Reserve, the Bank of England. Expectations are building that at least if they're not going to do it tomorrow, even though people believe they're going to do 50 basis points tomorrow, they're definitely going to move fast in the autumn as well. So there's no way to avoid that anyway.
Yeah, we're so far through the global central bank's narrative about fighting inflation, yet the ECB has not started yet. Worth remembering as we head towards tomorrow. Tassos, thanks so much for joining us. Bloomberg's Tassos Vastos with us in studio here in London. And for more market analysis, check out MLIV Go. That is the function to use on your terminal to find the market's live blog. This is Bloomberg.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
But ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
Lots happening on Wall Street.
It's the basic law of economics.
It validated what the market was already pricing.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
It's a challenging dynamic.
We could continue to see that kind of strength.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Now, keeping you up to date with news from around the world, here's the first word. Former Secretary of State Henry Kissinger is warning President Biden of endless confrontation with China. The man who helped reestablish U.S. ties with China in the 70s spoke in an interview with Bloomberg News editor-in-chief John Micklethwaite. Kissinger said that geopolitics today requires, quote, Nixonian flexibility to help diffuse conflicts between the U.S. and China. In the UK, Conservative MPs will decide today which two candidates will face off in the battle to replace Prime Minister Boris Johnson. On Monday, former Chancellor of the Exchequer Rishi Sunak topped the fourth ballot of Tory lawmakers. He was just 2 votes short of the threshold that would guarantee him a spot. Foreign Secretary Liz Truss is now the favorite to join Sunak. Coming up, we may talk the UK economy as well as the ECB and the Fed. Holger Schmieding of Berenberg joins us. This is Bloomberg.
almost the end of the year, but Bali is still quiet and empty. I am here in Kuta Legian, one of the main walking streets here that is used to be a tourist spot for beach, dining, shopping, but many shops here are still closed. Most of the outlets are either for rent or for sale as they have run out of business.
Saya kerjanya di sini udah lama, udah ada 10 tahunan di sini kerja. Masih sepi sih, nggak kayak dulu. Kalau dulu kan rame, sekarang ya ada 1-2 itu ada, tapi nggak kayak dulu. Kalau dulu rame sekali. Sekarang paling dapat jualan ya 100, 120 gitu, 200 ya. Kalau dulu sih ya nyampe dah 1 juta, 1,5 itu nyampe dapat jualan. Bisa sampai 2 juta dulu. Sekarang nggak pernah lagi dapat segitu. Sama aja. Belum ada turis ke Bali. Masih ya domestik aja.
While Bali has reopened its borders for foreign tourists since October, they're still not coming in. Many international airlines are yet to reinstate their direct flight to the island. Balinese people here really hope they can see more people from Australia, China, and Europe to come visit next year.
Stocked early enough all these precious materials you were just mentioning, and we were on the lucky side that our prognosis was spot on in a way, forecasting what kind of material we would need and what quantity we would need.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
This is Bloomberg Surveillance Early Edition. Here's what you need to know. Netflix predicts it will return to growth after losing another 1 million customers. It also plans to introduce a lower-priced version of the service with advertising. Tesla is the next big tech company to report. The electric car maker will reveal just how much that China lockdown has hurt. Italy's Mario Draghi says his governing coalition can be rebuilt. That's tamping down concerns that he'll quit the government and throw the country into chaos. We will speak with the former chief economist at the Italian Treasury. And that Russian pipeline will resume sending gas to Europe. But first, Vladimir Putin has some conditions. Meanwhile, the EU wants members to cut back on their gas use just in case Russia cuts off supplies. I'm Anna Edwards in London with Matt Miller and Kayleigh Lyons in New York. And Matt, it feels a bit of a transition day. We've come a long way on that narrative that maybe we'd expected too much hiking from the Federal Reserve. We dialed back those expectations on Friday, and the assets sort of ran with that theme for a little while. Then a sprinkling of corporate earnings, of course, on top.
Yeah, the corporate earnings, I think, key here. You know, Bloomberg Economics thinks the terminal rate will be 5% now. So still expectations for a lot of Fed hikes. Nonetheless, we had a huge rally in the cash trade yesterday. I think 2 3/4% was the gain on the S&P 500, and it was incredibly broad. Everybody was up. We still see gains in futures, although they're minimal, right? Only 0.2%, and investors are buying 10-year debt. That's keeping the yield, though, down below 3%, supportive of equities. NYMEX crude is also coming down a little over $1 a barrel, supportive of equities, although at a relatively high level, 103.13. And Bitcoin is rising from midnight and back up above the $23,000 level. So you see it right now at more than 23,500. Kayleigh, what do you see in terms of the pre-market movers this morning?
Well, you're actually seeing some movers related to a headline that just crossed the Bloomberg terminal that Macau will reopen casinos on July 23rd if conditions allow. So that's only 3 days away. So the likes of Wynn Resorts and Las Vegas Sands, both of which have big operations in Macau, are getting a bit of a boost off of that news. Now, of course, the other movers we are paying attention to relate to one story in particular. That would be Netflix, which reported after the bell yesterday. Those subscriber losses, not as bad as Wall Street had feared. Less than 1 million losses rather than the 2 million that the street was expecting. So that stock, after falling by about 2/3 on the year-to-date basis so far before it reported its results, is now getting a nice lift, up about 7%. And it's lifting other streaming companies as well. Roku and Disney, each up in the ballpark of 2 to 3% this morning. And of course, the earnings we wait after the bell today, Tesla. Anna, will be very closely watching the situation in China, how it has hampered production, what the outlook for the second half looks like. But ahead of those results, Tesla is up about 2 percentage points before the bell.
Lots of focus on tech earnings then this week coming out of the United States. Here in Europe, we're focused on a lot of geopolitics. We're focused on the flow of gas, focused on Italian politics, of course. Stocks dealing with that pretty well this morning, up by 0.25% now on the Stocks Europe 600. We started the day in positive territory, kind of wobbled in the early part of the morning, but now back in our stride and making some modest gains. The Italian 2-year yield, I put that in because of our focus on the Italian political story. We still have that confidence vote to come in Rome. It seems, though, Mario Draghi comforting the markets, issuing those words that bring down spreads, that reduce that spread between Italian BTP yields and German bunds, by saying that he thinks his coalition can be rebuilt. And that was a crucial question hanging over him and his statements today. We've got the natural gas price on the rise once again, up by 4%. It dropped yesterday on a lot of reports from us at Bloomberg and from elsewhere that suggested that Russia is minded to turn back on those taps on Thursday. That's tomorrow, of course. But for how long do those taps remain open? What conditions will President Putin apply to the reopening of that supply through the Nord Stream pipeline? pipeline. A lot of questions still remain. And Uniper, we put this in. This is a gas giant, of course, up by 17% in the German session. It's been in discussions for a number of weeks now about the potential for a bailout or a rescue by the German government. How much of the company will the German government end up owning? Well, all of this talk seems to be coming to a head, and that stock up another 17% in today's session. Now, let me tell you that tonight at 9:30 p.m. Wall Street time, you can watch the full airing of The Next Big Risk on Bloomberg Television. Abby, Joseph Cohen, Sam Bankman-Fried, and Ken Moelis share their views on what threats investors should be looking out for 5 to 10 years down the road. Here's what Ken Moelis had to say about the end of globalization and Germany in particular.
Germany's strategy up to this point was to outsource their military to the United States, to outsource their financial management to the EU. They outsourced their energy supply to Russia, and they outsourced their end market to China. This was the complete globalization of an economy, and you can see at this point, I think they're in extreme trouble.
The views there of Ken Moelis. Holger Schmieding joins us, Berenberg chief economist, to talk about the Eurozone economy, the global story, but also let's start, Holger, on the German economy. We just heard Ken Moelis there talking about the geostrategic choices, I suppose, that Germany has made over decades, and maybe that leaves the German economy in a particularly tough place right now. What are the prospects for Germany, do you think, from here?
Well, Germany is indeed in a tough situation now. It remains dependent on Russian gas, and the Russian gas supply is not secure. And as a result of the very high prices that we already have and the hit to consumers, Germany is probably now in recession. Having said that, I would not be all that negative on the longer run outlook for the German economy, because Germany is so globalized. It actually means that the German economy has learned to adapt to challenges. There have always been challenges coming from major exchange rate movements, coming from major crises. And because German companies, especially in industry, are so heavily exposed to competition, they just know how to deal with challenges. So never underestimate the ability of Germany, of its companies, to adjust to challenges, even if the challenges are huge at the moment.
Holger, what do you expect to see in terms of rationing in Germany? I mean, are factory workers going to be, are factories going to be cut down to 4 days a week?
We have no idea of that. At the moment, it is still a bit more likely than not that there will not have to be a rationing of gas. At the moment, we are still sort of on track. If some gas from Russia comes in the next few months, to fill our storage facilities up to the desired 90% before the onset of the cold season. So the discussion about rationing is a serious risk, a risk that would probably turn a somewhat mild recession into a serious recession over the winter, but it's not yet the base case.
Well, we already see some rationing unrelated to the natural gas issues in London with the announcement that Heathrow is going to cap flights there. The EU, Holger, says the worst case scenario if gas is cut off is a 1.5% contraction in GDP. Does that seem a little too optimistic to you?
Well, my guess is that on top of the recession, which we already predict, which is a decline in Eurozone GDP by about 1% next year, we would have another hit to the Eurozone of around probably 1.5 percentage points if there had to be serious rationing of gas. That is, if parts of industry had to be cut off from gas. We don't quite know the precise plans. They are being worked on, but that gives you a rough magnitude of the potential hit to the economy from gas rationing, which is a serious risk, but not yet really the base case.
Okay, well, Holger, as we're talking about risks to the European economy and the recession you're describing, at the same time, the market is also pricing in essentially 50-50 odds that the move tomorrow from the ECB is 50 basis points. How much is the ECB going to realistically be able to do if they're hiking into weakness?
The ECB really is in a weird situation. They are now hiking rates into what probably is, well, we are on the brink of recession. And once the summer tourist season, where people are spending money, once that is over, the Eurozone will probably be in recession, say by September or October at the latest. And into that, the ECB wants to hike rates in a situation where the inflationary pressure is almost exclusively coming from abroad rather than from domestic excess demand and not yet from domestic excess wage hikes. So the ECB is in a funny situation. I do think that tomorrow they probably will deliver 25 rather than 50. Why? There is a case for 50, given that inflation is high. Yeah. But ECB President Christine Lagarde has been so explicit in her Sintra speech that it will be 25 basis points, that it would really look odd if the council were not to follow that.
Fair point. And of course, Holger, it's not just the rate decision we're looking out for tomorrow. We're also hoping to gain an understanding of what exactly this transmission protection mechanism is going to look like. In your mind, is the ECB realistically going to be able to keep control of the periphery of Italy specifically when the political risks there are still unclear?
In the big picture, the European Central Bank can keep control of the situation. Why? Because in dire straits, it could print a lot of money to intervene in bond markets, and bond markets know that. The ECB is the lender of last resort. The real question is at what point, under which conditions, this support would kick in. If in the current situation, with political uncertainty, for instance, in Italy, it would make little sense for the ECB to intervene unless things were, say, in bond markets really go completely wild. This is now not something where you could say, we have this situation in Italy, which is just weird, which is just markets going wrong. At the moment, we have genuine political uncertainty in Italy. And in my view, the ECB should not act against that. They should ideally tomorrow tell us they have an anti-fragmentation tool, they have rough ideas how it would work, but they're not going to tell us the details, and they will certainly not intervene sort of in a political rather than economic funding situation.
Okay, no doubt they are very focused on the goings-on in Rome today then, Holger. Thank you so much for joining us. Holger Schmieding joining us there of Berenberg. We will stick with this theme. Coming up, Lorenzo Codogno, founder and chief economist at LC Macro Advisors, will be with us. Crucially, he is a former chief economist at the Italian Treasury. What are his views on what's at stake in Italy and the broader ECB picture? This is Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Kaylee Lyons with Matt Miller in New York and Anna Edwards in London. In Italy, Prime Minister Mario Draghi has told the Senate that his coalition can be rebuilt. That's easing concerns that Draghi will quit the government and throw the country into chaos. Markets rallying after his comments, but of course that follows a sell-off we have seen over the last week when Draghi said he wanted to resign because he didn't have the backing of all of the parties in his coalition. Joining us now for more on the political situation in Italy is Lorenzo Codogno, founder and chief economist at LC Macro Advisors and former chief economist and director general at the Italian Treasury. Lorenzo, thanks for being here. So Draghi thinks his coalition can be rebuilt, but if it remains fractious and hard to keep together, is that really the optimal outcome for the Italian economy?
No, it would not be a good outcome, but he made it clear that he wants to rebuild the coalition and want to relaunch the national unity government, but there must be unity. So if there is no unity, probably he would step down. Now, in his speech, which lasted about 30 minutes, he listed all the things that needs to be done between now and the next election, so the spring of next year. And he also explicitly mentioned some of the touchy points for the Five-Star Movement and the League. So it remains unclear, in my view, whether these two parties will confirm the support or will decide to walk away.
Okay, so we get that vote a little bit later on, Lorenzo. We'll look for the outcome there. Give us a sense of, when it comes down to it, what are the things that are dividing Italian politics at the moment? I understand how to spend a lot of the money that's coming through from the European pot is part of the conversation. Support to hard-pressed households, support to Ukrainian fighters. What's the real sticking point?
I think there are a number of very specific issues which are part of the, say, idea of the several parties forming the coalition at the moment. But I would say there is a more general political issue, which is elections are approaching. And as elections are approaching, inevitably, some political parties would want to separate the message of the party from the message of the national unity government to differentiate and trying to gain consensus. And this is inevitable. So I think today Draghi said to everybody, listen, I mean, I'm here, I'm available, but if you want to continue this experience until the end of the political term, there must be unity. And to me, as we speak today, this unity is still not fully in place. So we will see the reaction of parties, but the risk is clearly that the unity is not in place and Draghi is forced to resign.
That's the risk, Lorenzo. Is there also an opportunity from Mario Draghi's perspective to come out of this stronger? Can his position at all be reinforced by this confidence vote?
I think he has no political ambition, and so he is really trying to serve his country in the best possible way. I think if Italy goes to elections, it would not be a disaster, but it would cause some delays and some disruptions, which, given the situation and the delicate economic outlook, probably would not be ideal in this situation.
I wonder what you think, Lorenzo, about the ECB's tool. Can it be unlimited? Do they run the risk of a court challenge?
You know, the ECB is continuing to introduce new tools and new procedures here, but the real problem is that the Eurozone needs to proceed very quickly towards economic and political integration, because if that is missing, these can only be fixings, temporary fixings. Now, these temporary fixings can actually prevent the widening of spreads on conditions, but I think it remains unclear whether the tool that will be announced tomorrow will be really effective, because it is challenging, and also whether it will be communicated in an effective way by the ECB and Madame Lagarde. So I think there is still uncertainty whether this will prove to be a sufficiently effective tool to prevent the fragmentation and prevent instability, financial instability in the Eurozone.
Is it possible for them to craft something that is unlimited to satisfy the markets, but also limited to satisfy the courts? A difficult one to ponder. Lorenzo, thank you very much for joining us. Lorenzo Codogno of LC Macro Advisors, formerly at the Italian Treasury. Coming up on the program, back to the earnings story, back to the tech story, and Tesla out with results later today. We will preview what to expect next. This is Bloomberg.
Delhi airport, and behind me you can see SpiceJet 737 MAX aircraft. SpiceJet Chairman Ajay Singh earlier today said that Boeing is going to compensate SpiceJet in form of cash and aircraft. Celebration happening at the Gwalior airport. As you can see, they've literally rolled down the red carpet for SpiceJet Chairman Ajay Singh. There are balloons, there are flowers. This is a big deal for SpiceJet because it is the only Indian operator of Boeing 737 MAX planes currently.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
This is Bloomberg Surveillance Early Edition. I'm Matt Miller in New York with Anna Edwards. Kaylee Lyons was here also, and she'll be joining Tom Keene next on Bloomberg Surveillance. He joins us right now to give us his best chart of the day. Tom, what have you got?
What I got is what I had the other day. I show the bank chart, and so it's earnings season. Let's look at the tech chart as well. And, of course, it's a story of growthiness. This is an extraordinary chart, normalized and log normalized where slope matters. This is the logarithm of the percent change of Apple, Microsoft, Google, and in yellow, the Standard & Poor's 500. And it's just an absolutely remarkable chart. You can look at some of the parallel lines. You can look at when the CEO changed at Microsoft and get a view here. But what it's really about is growth of revenue, growth of free cash flow, and then each of these companies has a different approach on how they return cash to shareholders.
And Tom, one of the things that stood out so far when we've been looking more broadly at the earnings story has been the effect of FX on earnings. Certainly this was the story with IBM and with Johnson & Johnson yesterday. And I know that you've got an FX voice on the program today.
Well, we're going to do that. And Elsa Lingo starts drawing on that she's so comfortable with ECB, and we go to the ECB tomorrow. But what I would say, Anna, was with FX and with adjustment in corporations, it's back to my youth. You know, pretty soon we're going to start talking LIFO, FIFO, and the rest of it. And it's a return here to the, we're in the new inflation, 9.4% in England. So, we're back to phrases we haven't used in a while.
Yeah, back to some of those accounting terms we have known and loved. Tom Keene, thank you very much. Tom Keene back at the top of the hour with this stellar lineup of guests, including Elsa Linos and many others. Let's turn to one of those corporate reports that we will be digesting in detail later on today. That is Tesla. Tesla's run of rising sales and profit is under pressure as the electric vehicle maker prepares to report second quarter results after the close today. Craig Trudell, Bloomberg Global Car Czar. I've always wanted to be a czar. Don't know how you get one of those titles, but Craig's done it. Joins us on set here in London today. Car czar that you are, Craig, talk to us about the difficulties that this business has been having in China with lockdowns.
Yeah, obviously the Shanghai shutdown was a huge factor in the second quarter. We've already seen the production and delivery numbers from Tesla, and we've seen that they did take a significant hit from the weeks that plant was not able to operate. It's a hugely important factory for them in that it's not only feeding the local market, but been a huge export contributor the last couple of years. And so that affects their business here in Europe. So the big question and sort of, what this report hinges on for me is, just how much confidence Musk can project about, the forward-looking outlook for production, and can he get the production back up and running in order to meet the demand that's out there.
Anna, you get that title with an incredible amount of experience and skill. Craig Trudell has run our transport team in the U.S. and North America. He's run the transport team in Europe. He's run the transport team in Asia. So he's been stationed around the world. Most of that time, Craig, Tesla was the undisputed world champion of electric car production. Does that change next year? Does that change this year?
You hear a lot of companies starting to talk about their belief that they can supplant Tesla, but so far we've heard a lot of talk and not any signs of that, necessarily happening anytime soon in terms of a changeover in leadership. I think the maybe sort of company that you most expect to really give Musk a run for his money in the next couple of years is probably Volkswagen. There's been a lot of buzz about BYD in China, but of course you have to kind of factor in plug-in hybrids, which is depending on your view, much different in terms of how you rank these companies.
Well, this is,
but certainly they're challenging for it as well.
I mean, you mentioned Volkswagen. It's worth 86 billion euros. Tesla's worth $763 billion. Is this just like the last meme stock that needs the air to come out?
I think it does sort of beg the question, as much as they do have this, leadership position, both in terms of just the size of production in electric vehicles. There's been a lot of promise too in the sort of, tech aspect that, there's, I think, an important question to be raised about, whether the self-driving capabilities that Musk has talked about are going to be realized, and that may be an important answer as well.
Okay, something certainly to watch. Craig, thank you very much for that. Nice conversation to end the break around Bloomberg's Craig Trudell, Car Czar, expert in all things auto. That is it for the early edition. More surveillance still ahead. They'll have a strong lineup of guests to take you through the corporate earnings season, also the macro themes around gas supply to Europe, the looming ECB decision. This is Bloomberg.
About what they call black soot caused by the manufacturing and consumption of these fuel products in the illegal refineries.
Oil theft, known as bunkering, and the refining of its spoils is worsening the damage from decades of fossil fuel exploitation, creating one of the world's most severe ecological disasters.
Our sacred forests, our homes have to give way to oil wells, and no one gets much benefit.
Imagine a resident of Port Harcourt who inhales this soot every second in 24 hours, 7 days a week, 30 days in the month, and for years now, we are dying slowly but surely, and our lifespan is reducing every day.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
The issue going forward now is how much is the economy going to slow? How much is nominal GDP going to slow? And what does that mean for earnings?
The most likely scenario remains that the economy is going to navigate through without going into recession.
We are going through the different cycles and parts of a bear market, but this is a process that still has further to play out.
We do not expect that the Fed is going to really dramatically reverse course and cut rates.
The ECB now has to do the best that it can, which means hike rates.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Live from New York City for our audience worldwide. Good morning, good morning. This is Bloomberg Surveillance on TV and radio alongside Tom Keene. I'm Jonathan Farrow, together with Katie Lyons. Bramo back at some point next week. Futures up by 0.2% on the S&P. The dollar weaker again. TK Netflix in the pre-market up around about 7%.
Yeah, you know, 70% down from the top. It's not that big of a lift. I don't know what to make of it, John. They still lost 1 million subscribers. To me, it's sort of old news, but certainly it was relatively good news that we got out of them. It launches us into the tech story that we get here in the next number of days. Just did a chart on that, on the growthiness of technology. But, you know, away from ECB and all that we're going to talk about, John, the fact is equity markets have left the bears silent.
Reed Hastings nailed it, didn't he? We're talking about it losing 1 million instead of 2 million. Our excitement is tempered by the less bad results. That stock's been hammered, a super low bar. Looking ahead to next week, so on Tuesday, Microsoft and Alphabet, Facebook on Wednesday, Amazon and Apple next Thursday. What are you looking for?
I'm looking for a view into China. It's going to be fascinating to see the micro tone and the conference calls and the guidance forward on what's very important for them, which is the growthiness, the revenue gain that they can get out of China, plus going the other way, the supply shocks. But what I'm really looking for there is this the quarter, John, where they become ever more blue chippy and really start talking about what are they going to do with all the free cash flow.
You mentioned China. Let's talk about the mortgage mess over in China. Katie Lyons.
Tangible.
The loan boycott. We're calling this a loan boycott. Apparently it spreads.
Yeah, that's effectively what it is. It started with the home buyers not paying their mortgage payments because their homes aren't actually finished. The developers aren't finishing the projects. Now it's spreading to suppliers who supply those builders with materials. They aren't paying either because they're not getting paid. They can't afford to. It's just spiraling, John. And the question is, COVID zero, one issue China is facing. There is still property turmoil out there, and that is a huge portion of the Chinese economy.
Things are getting messy over there, and they're getting messier by the day. From New York this morning, good morning to you. Here's the price action on the S&P, up by a couple of tenths of 1%, following a really decent pop in yesterday's session, the biggest one-day gain on the S&P. Going back to late June, in the bond market, yields lower by 3 basis points, just in and around 3% on a 10-year over the last couple of days, 298.56. Euro dollar positive once again. This is 4 straight days now of dollar weakness, Tom. You've got to go back all the way to February to see a streak like that.
It's going to be really interesting to see the reaction here, and also, I guess as a proxy, John, the German 10-year, and I'll let you pick the Italian duration to see how they play into tomorrow.
It looks like Draghi's clinking gone. as the Prime Minister.
Francine has to translate.
Katie, clinging gone. I've got no idea if he's going to stay or not. He's signalling he's willing to.
He's signaling he's willing to. He says this coalition can be rebuilt, but will it be rebuilt? That's still the question. There is a lot still going on in Italy throughout the day that we will try and stay on top of. Separate to the Italy situation, though, a lot of events to watch as well, including here in the U.S. with economic data. At 10 a.m. Eastern time, we'll get existing home sales. And remember, we are coming off of two really weak home-related data points here in the U.S. First, you had home builder sentiment, the weakest level since May 2020 on Monday. Then yesterday, building permits were down 2% both month on month, both missing expectations. So how much does this data also speak to a cooling in the housing market in the face of higher mortgage rates? Then at 11 a.m. Eastern time, we'll head over to the UK for the final Tory ballot, which will be announced. The final two contenders to replace Boris Johnson as Prime Minister. Now, Rishi Sunak, the former Chancellor, has long been the front runner, but it actually looks like Liz Truss may be the second candidate. She's been catching up to Penny Mordaunt. And of course, that Citigroup note earlier this week said Liz Truss is actually the most dangerous from an economic perspective for the UK, considering she wants to cut taxes and disrupt some business operations. Then finally, after the bell, we'll focus on tech earnings. A second one reporting, that would be Tesla. Remember, this is a stock down 30% year to date. It has been dealing with a number of headwinds, not just being a growth company pressured by higher rates, but also supply chain challenges and the shutdowns in China weighing on the factory in Shanghai. So we'll really look for the outlook on that in the second half to see if the picture gets a little bit better for that EV company.
Yeah, John, really quickly here, they always picked a prime minister this way?
Well, they pick a leader of the party this way, in the Conservative Party.
This is normal.
And it just so happens they have a majority right now, so the leader of this party will become the Prime Minister.
Can we do this in America?
I think you'd have to change the system to a parliamentary one.
Somebody disappears? I mean,
you like the idea that we don't have these 2-year-long primaries?
I
Is
love
that what
it.
you're suggesting?
It's great. No, but every 6 days, somebody's, goodbye.
They're dropping out. Goodbye.
Yeah, goodbye.
I'm with you. Brutal British politics, Tom.
Yeah.
Brutal. Futures are positive, 0.2% on the S&P. We carry you down to a big ECB decision tomorrow. We can do that with Elsa Linios, the global head of FX strategy at RBC. Elsa, tomorrow, am I trading the ECB or Nord Stream 1?
Oh, there's so much event risk, isn't there? But it does feel like we got a lot of the clues for the event risk actually coming all together yesterday. So sources suggesting that Nord Stream will be reopened, albeit remains to be seen at what capacity. And then sources again suggesting the ECB is considering 50 beeps, and we're getting some hints of what the anti-fragmentation tool might look like. So for all the kind of build up into tomorrow, and there's still a lot to watch, we have certainly seen a lot of the hints and clues coming ahead of time.
We're looking for the theory of fragmentation, Elsa. And then there's the application of the theory. Does it sound doable to you? Whatever plan they come up with, explain to me how it's doable.
So there are a few big questions. I mean, clearly what's been talked about, or the sources been suggesting something that would be pretty monumentous in terms of size and scope, talking about very loose conditionality, merely countries sticking to the Growth and Stability Pact. But of course, there are two big ifs. One, will that get past the German Constitutional Court? As we know, MT was challenged, all the previous programs have been challenged, they passed, but this would be a further step. And the second is what happens on the political front, because it's all very well saying a country needs to be abiding by the Growth and Stability Pact, but there's certainly a lot of populist parties across Europe that have no intention of doing anything of the sort.
As we talk about the euro, obviously it has been substantially weaker at the same time that the dollar has been stronger, and there's a question of cause and effect, Elsa. On this program yesterday, we were speaking with Andrew Sheets of Morgan Stanley, and he said he thinks the dollar index could go out to 112 in the third quarter, which was kind of a wow call. John asked the question yesterday, where does that put the euro if the dollar strengthens to that extent?
I mean, there are certainly a lot of scenarios where euro-dollar could weaken materially from here. They're the more extreme scenarios. We're talking about total gas cutoff from Russia to Europe, deep European recession, and under those conditions, of course, you'd expect to see euro-dollar trade quite a bit weaker. It's not our base case scenario. We actually started the year with a call for parity, and that was a kind of forecast from December. And so being where we are now, it kind of feels like the bulk of the move is behind us. Our target at the moment is something around the 97 level. But of course, if some of those more extreme tail risk scenarios pan out, then yes, euro-dollar could be trading even to an 80-something handle.
So every single morning I keep seeing more and more news about Europe, whether it's the ECB or Vladimir Putin and Nord Stream 1. Not enough on China. Elsa, what is going on in China with the mortgage market? This growing loan boycott, and what on earth does it mean for foreign exchange markets?
Yeah, I heard you guys talking about it at the start of the program, and it's fascinating what's going on, because it's so different to the way mortgage markets work here in the UK or in the US, where homeowners or prospective owners are actually paying for an apartment before it's even been built. So I think there are kind of two sides to it. One is we're watching for what it means on the economic front. I mean, clearly we're seeing some downward pressure coming on commodities, and that's having a knock-on impact across the world. But from a currency perspective, the renminbi, it's still such a heavily managed currency that there isn't that direct link you would see in the rest of the world. There's still this widespread expectation that the government will be delivering substantial stimulus ahead of October. We're still pretty cautious on how far that can go given the zero COVID policy. And so in general, I think, investors, particularly as the Fed hikes, are kind of shying away from the renminbi somewhat.
Elsa, wonderful to catch up with you ahead of tomorrow. Asalinos there of RBC. TK, to make a forecast on Europe right now, you've got to make a forecast on what happens with European gas supplies. I've got no idea. To make a global economic call, you've got to make a call on what happens in China. Again, I've got no idea. I've got no idea. And what I would say, folks, in the last 24 hours, and trust me, I've struggled with this. I know many of you are as well. The debate of gas supply and Mr. Putin centers directly around sanctions. It's almost a Dan Tannenbaum issue to discuss. John, what I would point out, John, going into tomorrow's truly eventful ECB, that we can celebrate by understanding it's Snooze Fest Wednesday. We've shifted it one day forward. Thursday, just it's not going to be a Snooze
Fest at the ECB tomorrow. We're really going to be on top of this. And, he's too shy to mention it, Kaylee, but John's got some serious first-order knowledge of what ECB does.
Of course he does. I'm just wondering, Tom, if the beige suit only comes out for Snooze Fest days, so we won't be seeing a beige suit tomorrow. Dark suits.
I don't know. I've got a wardrobe consultant who may, dive into that tomorrow. We'll have to see.
Is this the last day? You said to me this morning, TK came up to me this morning, he said, final day. This is the final day I'm going to wear the tan suit, and then I'm retiring
Well,
it.
I've got a number
Why are you
of tan
retiring
suits.
it?
I'm retiring this one because I've gotten larger, is sort of the way it goes. And also it's ancient. Nixon was president when I first wore this suit. Yes.
Really?
Tom, if you take the show on the road to a beach, I feel like you should bring it out of retirement, though. If you get one of your road
we have
trips,
other
maybe to the
beige.
Hamptons.
We have other beige suits.
TK slowly going quieter and quieter. Kaylee, I think you're upsetting him.
Closet of where the hell's Bramo?
Bramo's where is Bramo? Actually,
Everest.
Where,
No, seriously.
Seriously,
it's really cool. I don't think she's going to the top of Everest. It was deemed too risky.
She's not?
No, you can go and go up, but not go to the top, because you get up to the death zone. She's not going to the death zone, John. She's going to the gloom zone.
The death zone is no joke.
No, I know.
People who aren't familiar with that, that's the point of the climb, where you get to this issue where it gets so cold, Tom, that if you stop, that is it.
And it's getting down is half the battle, but she is going to the gloom zone, which is,
I think she's permanently in the gloom zone, right?
Yes.
Although she would say that's where reality lies right now, Tom.
I know. She's got her Coleman thing. She's got the little lantern with the poofy lantern.
Thanks for that.
Coleman stove,
The sound effects, the suit, and everything this morning. Can you tell it's a quiet one going into the ECB? I can tell you it's a beautiful one in New York City. It is going to get steamy a little bit later.
Tomorrow's Steamy Thursday.
From New York, this is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. In the UK, Conservative MPs will decide today which two candidates will face off in the battle to replace Prime Minister Boris Johnson. On Monday, former Chancellor of the Exchequer Rishi Sunak topped the fourth ballot of Tory lawmakers. He was just 2 votes short of the threshold that would guarantee him a spot. Foreign Secretary Liz Truss is now the favourite to join Sunak. She's been closing the gap on Trade Minister Penny Mordaunt. In Italy, Prime Minister Mario Draghi has told the Senate that his coalition can be rebuilt. That's easing concerns that Draghi will quit the government and throw the country into chaos. Markets rallied after his comments. Last week, Draghi said he wanted to resign because he didn't have the backing of all the parties in his coalition. Vladimir Putin has signaled that Europe will start getting gas again through a key pipeline, but the Russian leader has some conditions. He says that unless a dispute over sanctioned parts is resolved, gas flows will be tightly curbed. Europe has been waiting to see whether gas resumes flowing Thursday, when maintenance on the Nord Stream pipeline is set to end.
And shares of Netflix trading higher. The streaming giant says it lost 970,000 subscribers in the second quarter, but that was less than half of what Wall Street expected. And Netflix says it will add 1 million customers in the current quarter. Meanwhile, the company plans to introduce a lower-priced version of the service with advertising around early 2023. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Companies now, they're getting hundreds, maybe even thousands of applications. So software has come in to automate the process.
You want to write your resume for robots, not for humans. The only job your resume has is to be comprehensible to the software that is reading it, because that software or robot is going to decide whether or not a human ever gets their eyes on it.
These things are programmed by a certain segment of the population that might not be totally inclusive or not be fully aware.
Concerns about how this technology could exacerbate discrimination. For the FTC, I think foremost, the FTC needs to be making sure that we're fully understanding this technology.
We don't trust companies to self-regulate when it comes to pollution. We don't trust them to self-regulate when it comes to workplace comp. Why on earth would we trust them to self-regulate AI?
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
It's a great question.
Great question.
Great question.
Great question.
Great question.
That's going to be the best question I get all night.
I'm glad you asked that.
Bloomberg Television. Top experts. Great questions. And Recession risks are building in Europe.
It's sort of a perfect storm hitting the European economy at the moment.
How will the European Central Bank respond?
The central bank will have its work cut out for it.
Tune in Thursday to a special edition of Bloomberg Surveillance for the latest news from Frankfurt, including ECB President Christine Lagarde's following news conference in its entirety.
Counting down to a big central bank decision.
Coverage starts Thursday at 6 a.m. from New York. Bloomberg, your global business authority.
The world is going through these two major shifts, one on interest rates and bond yields, and then on energy, it's reducing that dependence on Russia, which is a huge shift for the world, and it has, I think, several more innings to go to really get it right.
Wonderful to hear from David Malpass, the president of the World Bank, from New York City this morning. Good morning with Tom Keene and Katie Lyons. I'm Jonathan Ferro. Bramo back next week. Futures up 0.2% on the S&P. On the Nasdaq 100, positive by 1/3%. Yields in 3 basis points lower to 298.74. The euro just a little bit stronger into the ECB tomorrow. Euro dollar 102.36, positive by 1/10%. 4 days of dollar weakness. Vladimir Putin, the Russian president, Tom, signaled that Nord Stream 1 could come back online again with some conditions and maybe at a lower level. I understand that if the pipeline part that has been caught up in sanctions isn't returned to Russia, the president said the link will only work at 20% of capacity as soon as next week.
And there's not one part, but there's two parts.
As I understand it,
by part, folks, we're talking about some mechanical piece or something. I
and
don't
then
know.
next week, another part that's now in Russia needs to go for maintenance too.
I don't know. Just
you keeping up with this, Tom?
I'm trying.
I'm struggling.
I thought, can we send him a case of WD-40, and that would sort of get it
You
solved.
think that'd help?
As well.
Get things moving again.
Get things moving as well. We love to bust Anne-Marie Horton's chop. She's our Bloomberg Washington correspondent, and she's far too young to have the earned credibility of mileage in Europe, mileage in the Middle East, and indeed mileage across all of the challenges of the war in Ukraine. She joins us from Washington. And Anne-Marie, what I think is so important is what was missed yesterday within the American media. And that was Mr. Putin and Mr. Erdogan and in Iran a meeting. What did you make of the image that I saw last night in Bloomberg that was completely underreported in the American press? What do we make of this moment?
Well, you just saw the image there of the three leaders together holding hands, and that is an image of President Putin showing the West that he is not fully ostracized, right? And it's also with a NATO member who sometimes have a little bit of tangled relationships. The image that stuck with me, though, was President Erdogan having President Putin wait. And you saw how uncomfortable this was for Vladimir Putin. This is a man who used to have the Pope, Queen Elizabeth, Chancellor Merkel, journalists like myself wait for him to show up for a meeting or interviews, and now he was the one being left waiting, and he doesn't have the same power he used to wield. And that was the image that I think struck a lot of individuals.
How's Mr. Erdogan doing? This is a guy who grew up rough and tumble in Istanbul, had a spectacular early Erdogan. I'm calling it 2002. I'm looking at lira as one barometer, 17.59. Not in collapse, but what an ugly moment economically. Does he have any power, any say at that meeting yesterday?
Well, ugly economically in Turkey when you look at inflation numbers and the lira, of course, but he does have say because right now Turkey's been at the center of trying to broker a peace agreement, which many have poured cold water on. But right now what is really front and center is an agreement to try to get grain out of Russia and out of Ukraine. This is something the Europeans really want to see done. And Erdogan is the one that is leading these talks and is trying to get Putin to play ball.
John, I think the American media really missed this moment yesterday. I think it was more than a huge deal.
Let's not miss this moment with the European Commission and Ursula von der Leyen speaking right now. Confirmation of what we reported yesterday afternoon here at Bloomberg. The EU proposing a 15% cut in gas consumption on supply from Russia and the concerns around that, Tom. This is under this title, Save Gas for a Safe Winter. Tom, this will have to be approved by member states, but that's the proposal. Let's cut things back 15%, save gas now, and hopefully get through a tough winter.
I mean, Anne-Marie Horton, do they have the power to do that? This is not the United States where we have a very cohesive climate program. That was a joke, folks. But you've covered this with Maria Tadeo. Do they have the power to affect, what is it, John, a 15% cut in gas consumption? 1.5.
They don't have a choice. They are running on stockpiles right now in the summer that they would need to be used in the winter. And the biggest pipeline going into Europe, Nord Stream 1, is not working right now. There are no flows. And while President Putin has made the clearest signal yet that those flows would continue when it opens up for maintenance, he has these contingencies attached to it about this part you and John were talking about from Canada. And if that part doesn't come back, that had to deal with sanctions, it's 20%. Putin wants to keep a little bit leverage, I believe, in the tank, in the pipeline. But, you know, what Tim Ash is saying, that he wants Europe on its knees to make sure they stop their support for Ukraine. And he will certainly use gas, as he already is doing, as a geopolitical weapon. So Europe doesn't have a choice. And we've heard this from weeks, from European leaders and also energy executives telling industry and telling consumers that they need to start conserving energy, because this winter is going to be grim.
Anne-Marie, President Biden's done a good job of keeping everyone on side when it comes to putting sanctions on Russia. He's avoided embarrassing the Europeans. The Europeans haven't broken just yet. Do you sense that job is going to get harder as this year progresses?
Certainly. You can already see it now breaking in Italy, right? Mario Draghi is very much so on board with the Biden administration's plans, especially when it comes to the price cap. If he was to exit, who are they going to be dealing with? Remember, Italy, there's a strong population there that definitely leans a little bit more with ties with Russia. This dates back to the Berlusconi-Putin days, and it's a difficult one for Italy. This is what, their 67th government since World War II, and with Mario Draghi, they had a strong ally. When he was here just a few months ago, he was in the White House talking with the Biden administration. He was given an award by the Atlantic Council. Treasury Secretary Yellen came out, spoke fondly of their days as economic students and how they are working together to support Ukraine. You can already see potentially these cracks, and then you're going to have a cold winter and tell people to ratchet back energy use. This is going to get very difficult for Europe.
Anne-Marie, AMH down in DC. Anne-Marie, thank you. Numbers we expected to see, Kaylee Lines, but there they are, confirmation of them. A 15% cut, that's the proposal from the EU Commission.
Yeah, it's time to start taking action on demand, John. For so long, the conversation in Europe has focused on supply, on securing supply wherever they could get it. Now the conversation has to become one about the other end of the spectrum, the demand one, to avoid having to ration largely the natural gas supply that they can get when it's still a giant question mark what those flows are actually going to look like.
Enter President Lagarde into the room. It's on tomorrow. How many times have we said this? That decision tomorrow, is there a harder decision for a central banker to make right now?
Given the theory of the ECB, no, it's absolutely historic. And folks, you know, we're making a joke about it. It is Snooze Fest Wednesday. I want to make that clear. But into tomorrow, John, what will you listen for in the press conference?
Oh, Tom, there's so much. We've got to talk about the anti-fragmentation tool, how they cap Italian bond yields breaking out. I think that's going to be really, really difficult. At the same time, do they have to commit to another move in September, potentially 50 basis points? That's the talk at the moment, I think, in FX circles. And then the big one for me, what's more important to foreign exchange, rates or what happens with Nord Stream 1 and these gas issues that they've got at the moment? Ursula von der Leyen of the EU Commission saying a full cut-off of Russian gas is the likely scenario. From New York, this is Bloomberg.
The Indian city of Jamnagar is a money-making machine for Asia's richest man, Mukesh Ambani. His company Reliance has the world's biggest oil refinery complex here in the city. Jamnagar is also where Ambani is making his newest bet, a $10 billion investment in green energy. His ambition is closely aligned with the Indian government's plan to reach net zero emissions by 2070. But Ambani is not alone. India's second richest man, Gautam Adani, has committed $20 billion of investment over the next decade. But India's massive dependencies on fossil fuels have some environmental advocates questioning the realism and sincerity of those green ambitions and those of its two biggest billionaires.
A lot's happening on Wall Street.
It's the basic law of economics.
It validated what the market was already pricing.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
It's a challenging dynamic.
We could continue to see that kind of strength.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
From New York City this morning. Good morning on TV and radio. Here's the price action for you. Positive by a little more than 0.1% on the S&P 500. Decent day of gains yesterday. Really, really strong stuff. Every single industry group in positive territory. The S&P 500 with the biggest one-day pop going back to late June. Equities this morning firmer by 1/3% on the Nasdaq. Netflix skipping over a very, very low bar. We push ahead to the big tech names next week. In the bond market, quiet on a 2-year, on a 10-year. We closed Monday at about 317 on a 2-year, right now 318. On a 10-year, we closed Monday at 298, right now 298. The curve's still inverted, but not much going on here with the Fed in a quiet period ahead of next week. A snoozy one maybe in the Treasury market is a welcome development, given what we've seen over the last several months. There is nothing sleepy about what's happening in Europe. Tom and I and Kaylee too have been talking about that repeatedly. Europe looks like this right now. Euro dollar 102.38, positive 0.1%. 4 days of dollar weakness going into the ECB tomorrow. Ursula von der Leyen just months ago of the EU Commission, Tom, stating what a lot of people are starting to think, that a full cut-off of Russian gas could become the most likely situation for many people, including her.
Yeah, I'm looking at Netherlands natural gas, and it's, churn here off the peaks of early July, but it's up a little bit here. I don't want to make too much about it, John, but nevertheless, what we need to know is natural gas in Europe is exceptionally elevated versus in the United States.
A bit of good news out there. Prime Minister Draghi's holding on. Some good news for the Italian debt market. Lorcan Roach-Kelly of Bloomberg coming out with the best line of this morning that Draghi is here to close spreads, and that's what's happening. The Italian 10-year down by 12 basis points. The German 10-year comes in by just 6. That spread between the two in and around 200 basis points. Tom, is that the comfortable level, the comfort level of the CCP as they're set to unveil some kind of tool that stops that from breaking out much wider than where we are?
We will stop now in the equity market, in the day trading and the churning and such, and talk about results. He is far too shy to talk about his results. They're out in little percentile analysis by Morgan Stanley. But the answer is the MSIF US Core portfolio is on the edge of act of God. Andrew Slemon joins us this morning to speak gospel. He's senior portfolio manager, managing director at the 93 and 99 percentile portfolio of the duration it matters. Andrew, your idea of short term is 3 years. For those that can't get out there, how do they get the courage to invest, forgetting about 1 week or 1 year action, and say, I want to invest for 3 years so I can get a 93 percentile like Andrew Slemon?
Well, I mean, look, from a market standpoint, when the market's down 20%, you look out 3 years, the returns are phenomenal. And I think that's what people are missing when people say recession, no recession. I say, market's down 24%. We've built in a lot of bad news here. Right. And then from, getting to a high percentile, when the market's down 24%, you can't go buy defensive stocks. You have to start looking for good quality companies that are down more than that. And I just think there are a lot of companies down 40, 50, 60%. And that's embedded a lot of bad news into their stock prices.
Yeah, nobody from Morgan Stanley's watching this morning, Andrew. Give me some names.
Well, I think the consumer discretion. I mean, look, University of Michigan consumer sentiment is at a 44-year low. You always have to think about which is the direction of change. And at that level, it's so bad that eventually it's going to improve. And I think gas prices coming down, optimism is going to improve. And when I think about where are stocks reflecting that very low sentiment, it's in the consumer area, home apparel, home furnishing, home retail, home builders. Those stocks have been crushed. And I think that's very, very attractive. And usually when I mention stocks like that, people tell me all the reasons why they're down already by that amount. And I think you just have to think things could get better from here. They priced in a lot of bad news.
So you have to think things could get better from here, but isn't the conversation we're having on the economic growth front that things are going to get worse, that we're going to slow as the Fed tightens?
It's like Brandon.
No question. No question. Look, at the market level, there's a battle going on. On the one hand, the bar was so low going into this earnings season. I mean, Tom Cayley, how many strategists have come on your show and said guidance is going to be lower? I mean, everyone expected a bad earnings season. So the setup was deliciously wonderful for, beating a low bar. That's the good news. The bad news is the Fed's not done raising rates. And I think we can't be too optimistic at the market level for that reason. But when you start to search for stocks, which is what I do, there are a lot of stocks down a lot more than the market. And I think there's a lot of quality stocks down a lot more than the market.
Well, Andrew, you talk about how everyone's expectation seems to be that guidance is going to be disappointing. It also seems that there's a lot of cohesion around the idea that the dollar is going to be a big theme as well this earnings season. We've already seen it, a warning from Microsoft. We saw it show up in IBM and J&J results yesterday. How large a headwind really is the dollar strength that has faded over the last few days?
Yeah. So look, number one is there's really no evidence that when the dollar goes up a lot, it leads to weak stock market over time. There's really no evidence. In fact, if you look at the last 10 times the market's up over the dollar's up over 10% in a year, the market's actually higher 3-6 months later. So there's no evidence of that. But and I think the reason for that is a lot of times the stock market says, well, it's the dollar, and the market looks through that dollar weakness because the dollar gyrates. It's incredibly difficult to call the market based on, where your perceptions of where the dollar is going. So I just wouldn't do that other than the extent I think you have to think about going into earnings season, how weak have stocks been and how low is the bar? And right now the bar is really, really low. So I think what you're going to see is some of these companies are going to say, yeah, earnings aren't great because the dollar's too strong. And I question whether the stocks are going to go down on that because a lot of that's already embedded in their stock prices.
Do we need a catharsis? I mean, it's as simple as that. The Bear Crew saying we've got to get out VIX 40, catharsis, Andrew Slyman, ages, grays further, et cetera. Do we need that?
Yeah, I mean, that is a very good point, Tom, which is usually when you have these types of sell-offs, they end in some, cathartic event or some type of bad financial, I hate to say it, but somebody floats to the surface. And what's happening in cryptocurrency and some of these vendors, is that enough? It's hard to think that's the case. So again, I do go back to this. I'm just not sure. I think the market's in a kind of in a standing mode where on one hand, again, earnings are okay, but on the other hand, the Fed's tightening, and usually that lows end in some cathartic event. Maybe that happens early this fall. I still think the market will be substantially higher by year end, but I just think it's too soon to get too optimistic at the market level.
Andrew, I swear that you were definitively bearish the last time we caught up. Is something starting to change here for you?
Well, I think what's changed is that everyone thinks earnings are going to be horrible. I mean, the one side of the boat is so crowded. Guidance is earnings are expected to be so weak that I think that presents, a very intriguing opportunity. And the other thing is, I'm always very nervous. I mean, I've been on this show. I'm always nervous going into the summer. Bad things happen to the market in the summer. And I think, we're into earnings season. We're getting a lift out of earnings season, but the Fed's going to raise rates. And what's going to happen next month? It's all going to be about how many more times the Fed's raising rates. And that gets me nervous. Anytime the conversation pivots from individual stocks, which is what we're doing right now, to the market overall, I think the market becomes more vulnerable.
Usually people get nervous coming on this show because they don't know what Tom's going to ask them. Andrew, it could be anything. Andrew Slimman there, Morgan Stanley Investment Management. Andrew, thank you. Looking ahead to tech earnings next week. Apple on deck next Thursday. Not tomorrow, the week later. Jamie just sent this over, my producer, Tom. Morgan Stanley's Katie Huberty citing Mac service weakness, cutting to 180 from 185. That's a small cut. Bear in mind that right now we're at 151. But it's Wells Fargo too. They come down to 185 as well from 205. This from Wells Fargo. This came yesterday afternoon. Overall, we see a worsening COVID situation in China and beyond, a deteriorating macro environment, increasing FX impacts as the biggest risk to near-term estimates. Just a little bit of cautiousness being baked in slowly going into Apple numbers next week.
You have a producer?
I do. Do you
Why
not
don't
have
I
one?
have a producer?
I thought you had a team of producers, Tom.
No, I have interns. That's all
Interns.
I have.
So they're with you for the summer and then they go away.
Some of them don't even make it through the summer. They go, I got to go out to Nantucket. Goodbye.
Because you make them do a calculus course, maybe.
No, we do that. We have a calculus
Katie, did he
brief
actually
every
do
Thursday
that?
afternoon.
Yes, that is absolutely true. I have the book on my desk.
Did you read it?
I did.
You
I
got to
do
know
what Tom King
dynamics,
says
you
largely.
know?
You were joking how guests get nervous about what Tom's going to bring up on the show.
People read a calculus
When I
book
come
before
in,
they stop it.
Yeah.
Stop it.
Yeah.
Stop it. You've got a friend. I would never do that to you.
You have a producer?
Katie's got a producer too.
Really? I don't.
Katie's got a team of producers, Tom.
This is
Futures
true.
right now down 0.2 to 1% on the S&P. We're down a little bit on the Nasdaq, just a subtle move lower in the last couple of minutes. We're down by about 0.1 of 1% there. Getting some updates on the European energy front. Nord Stream 1 is set to come back online tomorrow. I say set to come back online tomorrow. Katie, we're not sure if it comes back online, how much gas comes through it, and the Europeans are getting ready for a tough winter.
Absolutely. Ursula von der Leyen saying actually it's the most likely scenario that the gas doesn't come back at all, which tees them up for a tough winter. They're saying the winter in 2023, 2024 without